Britain and now. And so as a result, the entire country, I think, should take note of the fact that really because of two main factors, the public pension system has a growing, what's referred to as unfunded liabilities, promises that have been made to public employees, perhaps appropriately, but the funding for it has not been set aside. And so it's an unfunded liability that, for some magic, the government doesn't include in its balance sheet. For healthcare alone, that's approaching several $100 billion. That means that money is going to be due. On top of that, and this was the subject of the opinion piece, the tax system is overly dependent on the personal income tax, the most volatile form of tax. Now, we had a commission set up by Governor Schwarzenegger back in 2009, 2010, in which 7 Democrats, 7 Republicans said this system doesn't keep up with today's reality, in the sense that California is no longer a manufacturing economy and agricultural economy. It's much more of a service economy. And yet the tax system is overly dependent on the personal income tax. So we came forth with recommendations that said become less dependent. What happened? Unfortunately, the opposite. Governor Brown put forward an initiative that increased the personal income tax rate in California from 9.3% to 13.3%. That makes us more dependent. That's a crisis coming, and the entire country should take a look at it. So one suggestion that I made, which kind of carried out or had precedent back in the 70s, was if the state of California, perhaps not in this time of emergency, but ultimately will come to the federal government asking for assistance. If the state can't do it on its own, the federal government can insist that assistance can come, but you have to get your financial house in order. That was the underlying purpose.
All right, well, let's broaden this out because we only have a few minutes here. I want to talk about stimulus, the government response that we've seen, and I'd like to get your take on that. Obviously, we need to stem the bleeding here, but how do you think about that? And then also, how do we start to catalyze growth as a country? How do we start to move forward? What are some of the things that might make sense?
Okay, well, we're in uncharted territory. I mean, never has the economy been shut down entirely. I think the government has done and is doing the right thing, that providing government assistance to the unemployed, to small business, and to certain sectors. But as COVID-19 declines, and it will, and the economy begins to recover, challenges then exist as to what we should do to inject energy into the private sector and ensure there will be a long-term recovery. The risks exist now because of the high level of debt and deficit. I mean, 23 trillion of debt. It's larger than the economy in effect, and a deficit that is now about 1 trillion. The interest cost to the government will dwarf other spending. So I don't believe that you can reduce the deficit and revive the economy through increased taxation and more regulation. We need to free up the private sector to be the engine of growth. Maybe the government needs to do more on the infrastructure side, but we have to be very cautious about not having the government take over where the private sector should be, because after all, the private sector creates jobs, and jobs create tax revenues which fund government programs. It will take leadership at the political level in order to make that happen.
You know, Jerry, before I let you go, you and I, when we first spoke, we talked about my generation, the millennial generation. I know you spend a lot of time thinking about the generation. Obviously, we're the ones who are going to be burdened with a lot of this. So how should your generation think about my generation?
We should be very concerned now that we're planting the seeds, if we're not careful, for an angry generation, a generation that legitimately is upset about the inequality of jobs that may be available, or inequality generally. and they're angry at the system. And we have to be aware of that. You couple that with the fact that even before the pandemic occurred, I saw a poll that said 23% of millennials felt even then they didn't have a friend. To me, that suggests, and now with the virus and everyone enclosed, it is creating an angry, potentially an angry, lonely generation. And these young people are the leaders of tomorrow. So those of us that are in the generation beyond, we have to be sensitive to this, and we can't have just a knee-jerk reaction that all of the young people don't know what they're talking about, because that's not true, and
Well,
we need to be aware of that.
Very
And
Parsi, thank you so much, and thank you for raising the awareness of the relationship between the generations. I appreciate you taking the time. And on the other side of this break, we're going to talk about small businesses, specifically how we can help Black-owned businesses. LaRoche in for Zach Guzman today. The need for small business relief is real, but it's even more urgent for Black-owned businesses. Goldman Sachs did a survey recently where they found that 34% of Black business owners have seen their personal finances greatly hurt by the COVID-19 pandemic, compared to 27% of white business owners. We're joined now by Margaret Anadu. She is Goldman Sachs' head of investment, urban investment. Margaret, thank you so much for joining us.
Thanks for having me.
Always great to hear from you. And I know you've been at the forefront of this with the 10,000 Small Businesses program at Goldman, really getting a pulse as to what's happening. So if you could share with our viewers, what are the issues right now that are front and center, especially for Black-owned businesses?
Sure thing. So we were able to survey thousands of businesses a few times over the last couple months, and there's some bright spots, but still trouble ahead. So 84% of the business owners that came back to us said that they were, able to get PPP, and that was helpful to, as you said in the earlier segment, sort of stem the bleeding. But as we think about what that program did, it really provided 8 weeks of support, and we're sitting here talking in what is effectively week 20 of this crisis. And so the vast majority of the businesses that we surveyed said that they're going to run out of funding without more federal assistance by the end of next week. So there's a real urgency for more assistance, more thoughtful assistance, and that need is now.
Right. And that impact has really been uneven as well across racial lines. What were you finding when you were starting to look through those lenses where the impact is hurting the most?
Sure. So we are continuing to see a disproportionate impact to Black-owned businesses. I'll give you a few numbers around that. So one, we've seen the median employment of the Black businesses we surveyed go from 10 prior to this crisis already down to 7, right? And that's already with some of the reopenings we're starting to see around the country. And as you mentioned earlier, roughly a third of those Black-owned businesses have not seen their revenues get to even 25% of what they were pre-COVID. And this is, I think, the most troubling stat we've come to. Only 7% of those businesses think that they're going to be able to maintain payroll without additional federal assistance.
Mm-hmm. And you just brought up, yeah, you just brought up additional federal assistance, and we know that's super important. But also, you've talked in the past about a comprehensive plan when it comes to a private and public sector effort around this. What do you think needs to be done? How can we move the needle here in a really meaningful way?
So I think one of the things we need to do is not just think about the amount of the assistance, the timing of the assistance, but how that assistance actually gets to these Black businesses. So one of the things, and this has been an issue prior to the pandemic, Black businesses are much less likely to have relationships with the mainstream financial institutions. And so as we think about more assistance, we can't just have it go through the big banks. We really need to be thoughtful about who gets to these businesses, where is that credibility, where are those connections? And what we found through our work is that most effective in getting that capital to Black businesses is the minority depository institutions, the Black banks around the country, and the community development financial institutions. So we need to not just support the businesses with more capital, but also provide the infrastructure for those smaller mission-driven lenders to invest in those businesses.
Yeah, I'm glad that you just brought it up as infrastructure as well. Just this kind of financial infrastructure, economic infrastructure, really creating opportunity. And the CDFIs, as you just mentioned, a great way to do that. This is good business and it's good for the economy. What could this mean for the recovery ahead? And if we can actually make fundamental changes here?
Sure, and I think you raise a great point. We don't want to just get back to where we were, right? We need to rebuild these businesses, the folks that get them capital, in a way that's going to make us more resilient and more fair and equal in the future. And so what we need to do is invest in those CDFIs and MDIs. It's not just capital, it's technology, it's human capital, it's connectivity to the broader mainstream financial system. And I do think a lot of that comes from the public sector in terms of how to support those institutions, but comes from the private sector as well. Goldman Sachs invested over $1 billion in CDFIs over the last decade. That has been profitable. It is something we see as good business, not just those investments themselves, but the catalytic nature of those investments and what it means for those communities where those CDFIs are the real, anchors for capital. And so we see it as dollars that are well invested and have a real catalytic impact.
Certainly something that we'll be watching. You're just referencing some of the investments that you all have been making. This is an area that we don't want to see go away. We want to see this continue to thrive. So I thank you so much, Margaret, for your time. Margaret Anadu, the head of urban investment for Goldman Sachs. Really appreciate it.
Thanks for having me.
And thank you all so much for watching the first hour of the ticker. Let's do a quick market check before we send it to break. Just looking, it's been a mixed picture today. We have the S&P 500 in the red, also the Dow. Following some of those earnings reports that came out this morning from the energy giants, the NASDAQ, however, is still in the green on the heels of the tech reports, the blowout tech earnings reports that we saw on Thursday. All right, well, I'm going to send this to break. Thank you so much for joining me.
Welcome to Yahoo Finance's live markets coverage. This is the ticker. I'm Akiko Fujita. We've got 2 hours left to go in the trading week. A bit of a mixed picture on Wall Street right now. Taking a look at the Dow, it is off its session lows, but still down more than 200 points right now. Caterpillar and Chevron leading the declines there after some disappointing earnings. In the case of Chevron, the company posting an $8.3 billion loss in the quarter, and we are seeing that stock off about 4%. Strong performance in the quarter from Apple, Amazon, and Facebook, giving the NASDAQ a slight lift in the afternoon session. The NASDAQ up about 27 points right now. We should point out the index was up much higher earlier in the session, up about 1.5% earlier in the day. On the economic front, consumer sentiment falling in the face of new coronavirus cases. The University of Michigan falling in the face of those cases, with the University of Michigan's consumer sentiment index dipping to 72.5. That is down 6 points from June and almost to the lows we saw at the beginning of the pandemic in March and April. Consumer spending, though, did increase for a second straight month. We saw a 5.6% jump there in June from the previous month. Spending still well below pre-pandemic levels. But keep in mind, today is the last day of the month. We've got enhanced unemployment benefits expiring, federal eviction moratoriums expiring. No sign of any deal in Congress right now. So there's a lot of concern that the momentum we've seen in some of the data we've gotten so far could begin to stall. Let's kick things off today, though, with those big 4 tech earnings we got after the bell yesterday. Certainly seeing some big moves in the market. Apple is up about 7%, Amazon up roughly 4%, and Facebook up about 7.5%, let's say. Google, though, the one laggard today, down about 4.4% after the company posted its first year-on-year revenue decline as ad spending dipped. Let's try to break all of this down for you. It's Santosh Rao. He is the head of research at Manhattan Venture Partners. Santosh, certainly a lot to get through to. I guess we'll start with the overall picture, though, because these are the companies that have certainly benefited over the last 4 months from the big push to work from home, the big acceleration in digitization. What stood out to you in the numbers we got yesterday?
Yeah, I think what really came out was, as if we needed to be reminded, these companies are woven into the fabric of our lives in every aspect of our lives. And this company, this quarter proved that. And even without the pandemic, these companies were executing very well. The pandemic definitely helped them, but they're executing very well. This is where you go to in the market, even after the pandemic. They're going to be around for a long time. The addressable market is still huge. They still tap just the beginning of it. So I think the runway ahead is still huge, and these companies are just on the right track, executing to perfection.
Let's start with one of the names that's getting a big lift today, and that is Apple, announcing a 4-for-1 stock split in that earnings call. When you look overall in the performance for the company, a double-digit growth in products and services. You surprised about the kind of growth we saw, especially given that we didn't necessarily see a big catalyst for example, iPhone sales.
Yeah, absolutely. I think iPhone was a big surprise, and services is coming on very strong. China came on very strong. So especially the iPhone sales, it sold as if it was the Christmas quarter. Just amazing. We don't know if it got pulled forward or what, but ahead of the 5G cycle, which is again supposed to be expected to be a huge push up, this was a great quarter. So any which way you look at it, the Apple's quarter was great, and it's nowhere saturated. Still a long way to go, and they're executing, especially the services part. And there's so many levers to pull that they have, so they can just go on and on from this point.
And Santosh, it's worth noting that Apple has been among the most aggressive in terms of the store closures. We've kind of looked to their retail outlets to see whether other companies would follow, especially as we've seen the uptick in coronavirus cases. So really surprising to see this kind of performance, given that they have really been on top of these closures. You look at what's played out in this month with those cases and the stay-at-home measures and the closures, and then you look to a few months down the line with the new iPhone coming out, even with the delay. How much upside do you see in the stock?
I see tremendous upside. I mean, if you look at the whole overall picture, about roughly 330 million, roughly 30% of the base is due for an upgrade. China is still picking up, and the 5G cycle is coming up. So I think the upside is huge ahead of this, even after all this. So I think there's no stopping this company at this point. The runway ahead is very good in terms of all the different variables.
Let's talk about another company, Amazon, a blowout quarter here. I mean, if you look at just the job creation, 175,000 new jobs in March at a time when we have seen huge cuts. A lot of this, of course, driven by their e-commerce business as well. We were talking yesterday going into the earnings, whether the sort of the 64% runoff, or maybe it's more than that now, in the stock is actually justified. Is it time to re-rate the stock now, given the performance?
Yeah, I think on a short-term basis, you can see it pulling back a little bit just to kind of digest. Kind of get itself together, kind of rationalize the stock price. But you see a long run ahead. I mean, e-commerce is still only 19% of the overall retail market, and this company has, again, like the other ones, so many levers to pull again. Plus, the cloud business is still going very well. The AWS business, and they're getting into others. The advertising business is picking up. There's so many other businesses coming online also. So this company again is very well positioned for the future. Yes, there will be a short-term correction, but long-term there's still a long runway ahead.
When you look at Google and Facebook, at least on the ad side, certainly different narratives emerging here. Google's seeing its first year-on-year revenue decline, partly because of the weakness in their ad sales. Google has, they get ads more from sort of the travel side, which certainly has been a significant, weakness over the last several months. How do you contrast the two performances here between these companies?
I think if any of the three got impacted by the virus, it's really Google, because they got impacted in the areas that they dominate in. So it'll come back up, but I think even though the quarter was down on a relative basis, it was still a good quarter. On such a big base, growing at these percentages is still very admirable. So I think Google is fine. Yes, they're slowed down. Yes, they've been impacted by the virus, but I think they are holding their own. Again, they have the YouTube and they have other levers to pull down the road as well. So all these companies, that's the beauty of it. They're not one-trick ponies. They have so many levers coming up, so many levers to pull. So they will continue to execute very well.
And finally, Santosh, how should we be looking at the benefits we've seen for these companies on these stay-at-home, moves, the digital acceleration, whether it is in the cloud space or the product space? In the case of Apple, has a lot of that demand already been pulled forward? I mean, the kind of growth we saw in this quarter, is that sustainable?
Yeah, there is a little bit of that. It got pulled forward. But as you know, everything is moving towards digital economy, digital lifestyle. So I think maybe the near-term demand got pulled in, but overall the demand ahead that's where the demand is going to be. That's where the world is moving. So I think these companies are well positioned on the sweet spot of where the whole economy and the market is going.
Okay, Santosh Rao, good to talk to you on a very busy day in tech, the head of research at Manhattan Venture Partners. Thanks so much for your time.
Thanks for having me.
Let's turn our attention to another tech stock that's getting a big boost on the back of some strong earnings there too. Pinterest posting global monthly active users growth 39% year on year. That is a big number. Let's bring in Emily McCormick for the very latest on the company's reports there.
Well, Akiko, taking a look at Pinterest results, it's not just those big tech companies getting a boost here for the second quarter, also a blowout quarter for Pinterest. Now, we saw second quarter revenue handily topping estimates at $272 million, well above the $251 million that had been expected. That was good for 4% revenue growth year on year. We also saw that second quarter adjusted loss per share of 7 cents, much narrower than the loss of 14 cents that had been expected. It's worth mentioning again those monthly active users numbers that you highlighted. That was up 39% year over year to 416 million, also representing an acceleration from the 26% growth that we saw in the first quarter this year. Now, what really had Wall Street bullish about this stock and what's really contributing to this run-up that we're seeing today was Pinterest's guidance, or what they're seeing now at least, for July revenue growth. They said in their preliminary results that July revenue growth has been up about 50% year over year. So actually significantly accelerating into this third quarter. And the company sees overall third quarter revenue growth in the mid 30% range. Of course, again, looking at what we saw in the second quarter at just 4% revenue growth, a huge acceleration here. So one of the reasons for this jump that Pinterest actually attributed this to was the ad boycott of Facebook and also Twitter to an extent. Now, Pinterest said it's not sure exactly how sustainable this is going to be, but we did have Chief Financial Officer Ted Morgenfeld saying on the earnings call this morning, quote, "The boycott has given us an opportunity to win some budgets and to educate advertisers about how and why Pinterest is different." Now, Wall Street as a whole has been pretty impressed with these results, especially since earlier this second quarter reporting season, we did see Twitter, which is a competitor, of course, posting a 23% drop in ad revenue, and Snap seeing its revenue growth actually decelerate. So encouraging again here to see Pinterest posting the opposite trend, really strong revenue growth for the second quarter, looking like that's going to continue into the third quarter. And we did have Pinterest stock up as much as 37% today for its best gain on record. Akiko.
Yeah, a huge pop in the session on the back of those numbers. Thanks so much for that, Emily. We are off for a quick break, but coming up, we're going to tell you about the latest timeline on the coronavirus vaccine. Dr. Anthony Fauci testifying before House lawmakers will tell you what he had to say about a potential vaccine that could be coming to market by the end of this year. Also, we'll be joined by the CEO of Emergent Biosolutions, Bob Kramer, will be joining us on the other side of the break.
How realistic is a vaccine? Is it dreaming or is it a reality?
There's never a guarantee that you're going to get a safe and effective vaccine. But from everything we've seen now in the animal data as well as the early human data, we feel cautiously optimistic that we will have a vaccine by the end of this year and as we go into 2021. So I don't think it's dreaming, Congresswoman. I believe it's a reality and will be shown to be a reality.
Optimism on the timeline for any one of these vaccine candidates to come to market. He also cast doubts on vaccine development efforts by China and Russia, saying he does not believe there will be vaccines so far ahead of the U.S. Let's bring in Dr. Suzanne Judge. She's an epidemiologist at the University of Alabama at Birmingham School of Public Health. And Suzanne, it's great to have you on today. You know, I feel like every time we talk, we're talking about where the timeline stands on the vaccine. You heard Dr. Fauci there saying that he's really optimistic things could come to market by the end of this year at the earliest. How are you seeing this vaccine race play out?
I think he's exactly right. The early human data looks good, which makes us feel very comfortable that if the next round of trials are promising again, we could move into manufacturing. And that's going to be one of the big holdups for the pharmaceutical companies. Even after they have a vaccine that works, they have to be able to make enough for hundreds of millions of Americans, and that just takes time.
To that point, we did get some news today from Sanofi announcing that it had secured an agreement of $2.1 billion to supply the U.S. government. 100 million doses is what we're looking at right now. There certainly does seem like there's a global race right now to secure any one of these vaccines, and there's questions about accessibility. You know, who's going to get it first, and how many doses there will be for those who really need it. How are you seeing that play out?
Great question. That's one that we haven't answered yet. We don't know who needs to be vaccinated. Often we vaccinate children, but as we're learning with this virus, that's probably not going to be the first target population. We tend to be better as a public health community about vaccinating children because we can control their entry to school. So it becomes a really easy way to vaccinate all at one time. This one, we don't have a plan yet. There's not been a clear plan put forward. Who will be vaccinated? When will they be vaccinated? And how will we decide the priority in terms of who gets to get the vaccine first?
So then it becomes a question of who's most at risk. As you see these virus cases tick up in new states, like a Tennessee, are we starting to see that the profile of those patients change? And how does that change who actually should get the vaccine first?
That's another good question. Absolutely. We're seeing younger and younger people get sick. And by younger, I mean 18 to 45. That's a group that had not traditionally been included in the data we'd seen from New York and from Washington State, that is. Now we're seeing that as each state begins to roll into this almost second wave, they tend to be much younger in terms of the cases. And when you think about a vaccine campaign, it would depend on whether or not the goal of the campaign was to stop the spread of cases or protect the people who are most at risk of dying. And you can imagine two very different strategies. If we're trying to protect the people at risk of dying, we would vaccinate the older population. If we were trying to protect the people that seem to be spreading it the most rapidly, we would probably vaccinate the young adults. So that still remains to be seen how this will play out.
It seems like we're always getting this mix of good news, bad news when it comes to where we are in trying to control the virus. You know, on the one hand, we've seen the average number of cases per day down about 1% from the last few weeks, which is not significant, but seems to show that there's some capping off that's happening. And yet we heard from the WHO today said that there was a record daily increase in cases globally. The total number increased by 292,000 or more than that. What's your sense of where we are in realizing the totality in the impact of this virus?
We are still not in a good place, particularly in the US. The whole southern part of the United States has way too many circulating cases. And that matters because the more circulating cases you have per person, the more likely someone else will become infected and the less likely we can really control this pandemic. We should be able to control it in the summertime. I mean, our numbers should really be better than they are right now. So it becomes particularly scary when you think about what will this mean in November, December. Roughly 80% of Americans have still not gotten the coronavirus. There are a lot of people that are still susceptible. And what the WHO was highlighting are some other countries like Brazil and Chile that have seen really dramatic increases in cases. It's almost like as soon as you take your foot off the brake, it gives the virus just a little bit of space, it starts to spread all over again.
You just pointed out that there's still concern about what could happen down the line in November or December. There's always been this concern of a second wave that could be coming in the fall. Do those concerns still hold, or are we looking at, you know, something like what the WHO said last week, which is essentially this is all one big wave. There's no break in the middle here.
They're right. We really haven't hit a break. We never came back down to close to zero in cases. So really, we're still on the first wave. I think that the concern is that there will be another wave in vulnerable populations, so that you'll see cases start to grow in those people that are over the age of 75 or with chronic health risks, which would mean that we'd have an increase in deaths. I think when people talk about the second wave, they're talking about that second wave back into vulnerable populations, but not the true epidemic second wave.
So what needs to be done now to ensure that we are in fact prepared for that second wave? If we're still in the first wave and we're still struggling to get the testing done and getting it turned at a meaningful time, it seems like we've got some control on the most vulnerable populations. We're not seeing the kind of death rates we saw back in March or April. What needs to be done in anticipation of yet another wave coming?
We have to give people clear guidance about what this virus is and how it spreads, helping them understand why we think wearing masks is important in public, why we're trying to keep gatherings down to less than 50 people in some places, less than 10 in others, depending on how many cases you have. If we can get people to change their behavior slightly, it would really slow the spread of this. And if we can maintain that behavior change into the fall, that will help us to contain any isolated outbreaks that we see that could be very damaging, again, if they hit some of those vulnerable populations.
Yeah, some good advice there as we continue to see upticks in new states with these cases. Dr. Suzanne Judd, always good to talk to you. Thanks so much for your time.
Good to talk to you too.
We're taking a look at shares of emergent biosolutions getting a big pop in the session on the back of a strong quarter. Shares there up about 10.5% right now. The company raising its guidance for the full year to $1.6 billion. That is a double-digit increase from the previous range that we saw. Let's bring in Bob Kramer. He is the CEO of Emergent Biosolutions. Bob, it's always good to talk to you. You certainly had not just a strong quarter, but a very busy one with some big partnerships signed there. How do you keep the momentum going?
Well, I think we keep the momentum going, Akiko, with focus. I mean, our 2,000 employees at Emergent come into work every day, whether it's virtually or in one of our 9 manufacturing facilities, with a clear mission on executing and making sure that we live and deliver the commitments that we've made. And you're right, the second quarter was extremely busy for us. We put under contract $1.5 billion worth of contract development and manufacturing service contracts with companies like J&J and AstraZeneca, as well as directly with the U.S. government through our affiliation with Operation Warp Speed. So it was a busy quarter. I couldn't be more proud of the organization and the collaborators that we've chosen to do business with. So we're executing, and I think your last guest, Dr. Judd, made a really good point, which is, there's the clinical development challenge of these COVID-19 vaccines, and then there's the manufacturing and the development piece of that, which is where we focus. So we are hyper-focused on making sure that we are in a position to deliver on our commitments to companies like J&J and to AstraZeneca to be in a place where we can manufacture hundreds of millions of doses of their vaccine candidates very quickly.
So let's try to break down some of those partnerships that you just outlined. You mentioned AstraZeneca, J&J as well. You're on the manufacturing side of things for this. What are the preparations that are being done right now? Because we've seen these companies enter a new phase in the clinical trials. The hope is that once they get the green light from the FDA, things can ramp up immediately. What are you doing specifically in preparation for that?
Yeah, so Kiko, we're making sure that once these candidates demonstrate safety and efficacy, whether it's in a phase 2 or a phase 3, to the satisfaction of the FDA, in parallel, we will be in a position with a validated, qualified manufacturing process to make the hundreds of millions of doses required by our collaborators for their products. So right now we are standing up and preparing to be able to manufacture later this year a number of vaccine candidates, including the 2 that you mentioned.
There's certainly a lot of concern about this vaccine race, and that Obviously, it's not just the US that's trying to get this vaccine to market right now. There's concerns about hoarding, if you will, of supplies and not being able to ramp up in the manner that's needed, especially given the high count of cases that are here in the US. What are you seeing on that front? And what specifically are you doing to ensure those supplies that you need are there when you need to ramp up that development?
Yeah, it's a really good point, Akiko. And I think one of the things that the U.S. government has done really well through their Operation Warp Speed setup is to ensure that companies like Emergent, as well as our collaborators, have the support required such that we don't experience any long lead items, whether it's in equipment or any of the raw materials required to manufacture these products. So we're in daily contact with the Operation Warp Speed folks, and they're helping us prioritize and break down any impediments or long lead items required to do the important work that we're doing. So I couldn't ask, quite frankly, more of the government. I mean, they are doing exactly what they need to do.
Now, separately from working with these companies on their vaccine candidates, you've also got a COVID-19 therapeutic treatment in development right now. Where does the timeline on that stand right now, and how quickly do you think you can bring that to market?
Yeah, so there's some really exciting news there on that front, Akiko. On our earnings call yesterday, we announced for the first time that we expect to be in a phase 3 clinical trial with our human-derived plasma hyperimmune treatment in August. We've been working for the last 5 months hand in glove with the government as well as with our collaborators. We're leveraging technology that we have used for decades to make a number of other therapeutic treatments for other emerging infectious diseases, and we're applying that history and that expertise now to COVID-19. So what we're talking about is a human plasma-derived hyperimmune treatment that could be made available after the phase 3 to patients who are either whose occupations put them at risk, or if they're hospitalized and presenting severe illness, it's almost to be used as a rescue therapy. So we're excited about that. And we also have a second very similar therapeutic treatment that's based on our equine program. So we have kind of 2 shots on goal from a therapeutic perspective, and then we're supporting 4 other vaccine developers in their efforts.
And what kind of timeline are you looking at the end of phase 3? I know you're just starting it in August, but could we see this come to market before the end of the year?
Again, it's possible. We expect that the phase 3 will last a couple of months. And as soon as the data is ready, we'll be sharing that with the FDA and seeking, if warranted, to get approval to make it available on a broader basis.
Okay, we certainly hope to have you back on then. Bob Kramer, always good to talk to you, the CEO of Emergent Biosolutions.
Thanks, Akiko.
And coming up, Joe Biden unveiling his proposal to address racial inequality in the U.S. Seville Marcellus is going to break that down for us on the other side of the break. Welcome back to the ticker. Democratic presidential hopeful Joe Biden is out with a new plan to reform the criminal justice system with a specific focus on the cash bail system. Sabeel Marcellus is here to break that proposal down for us. And Sabeel, this is part of a larger proposal he has put forward to address the issue of racial inequality.
That's right. So Joe Biden's plan to eliminate cash bail could put the $2 billion private bail industry out of business. And Joe Biden, he refers to cash bail as the modern day's debtor's prison. And he says that it disproportionately impacts Black and brown people. So basically, people are incarcerated pre-trial simply because they can't afford to post bail. And the private bail industry that's basically taking advantage of some of those people who are incarcerated and stuck in jail. That's how advocates who would like cash bail to be eliminated feel about the whole process. So in terms of what Joe Biden is doing here, the protests that we've seen have shown that criminal justice reform, a key part of actually getting racial economic justice, is addressing criminal justice reform. And that's what Joe Biden is trying to do here. And he doesn't want to just end cash bail. He also wants to guarantee housing for former prisoners and expand educational and job opportunities for people who are currently in jail and those who are former prisoners.
Okay, Sabeel, and we should note to our viewers that you can catch 2020 A Time for Change at 4:30 p.m. Eastern on Yahoo Finance today, where Sabeel will be taking a look at the broader issue of racial inequality as a weekly special that we have been airing.
That's right. Be sure to tune in.
All right, a good plug there. Thanks so much for that, Sabeel. One person who has been very vocal and very active in addressing racial inequality, Magic Johnson, of course, former Laker great, weighing in on diversity and pro sports team ownership. He spoke to our very own Andy Serwer about that issue. Take a listen.
Well, Andy, I think definitely it should be more Black owners in sports. And yes, I'm happy to be one of those owners in MLB of the Dodgers and Sparks and LAFC soccer, but we should have more. I'm hoping that more will hopefully soon be able to be an owner of different teams in different sports. We play on the field, we play in the arenas, but we haven't been able to go up to the ownership box. And so I'm hoping that that changes, but it has to change with the other owners first. If they say, hey, it's a good idea to have Black ownership, that will definitely happen. So the change has to be with them first, and then it would trickle down to us as Black athletes that can move from the field to the ownership box.
/presents Magic Johnson there. Coming up, we're going to do another check on earnings. We've got about more than 300 S&P 500 companies that have reported so far. How are they faring so far? I will also do another market check after the break.
is not that helpful. And we also do swab tests or other tests that really detect whether the virus is present in the nose or in the pharynx, or is it communicable. And those can be helpful to test before you travel, before you come back to work, before you play in a sports game. Now, again, you can have people who are asymptomatic feel fine and harbor the virus. A number of young, healthy people do that. So, and of course, baseball is not necessarily a high-contact sport, unlike football. And people may have the virus, but they may have acquired it elsewhere from families or the community.
Right.
So it's not that baseball itself may be necessarily risky, but people have normal lives outside of baseball. Yeah. But I think if we test people, and we get these results back anywhere from 10 minutes to 24 hours later, I think if we can test a player and say the day before, as we do before, say, colonoscopies, if they're negative, then I think it's reasonable for them to engage in the sport.
Right
so
now,
it will take a lot of testing.
Right now, my understanding, according to reports, is that the MLB is testing players every other day, but the results typically come in about 36 hours later. So in the meantime, those players are continuing to do their normal routine, which includes traveling to other cities to play against other teams. And then they have to backtrack later on if they find out anything. I mean, this is a league that can afford to test its players every other day. What does it say about our ability to get youth sports back online again? Clearly youth sports are not going to test players until there's a reason to, until the family member brings someone to the doctor's office because they suspect that there is something going on.
That's a great question, right? So typically we say, well, what are we going to do with a result? So if you are positive or negative, if you feel fine, are we going to do anything differently? So if someone is sick, a respiratory infection, cough, diarrhea, fever, any of those classic symptoms, yes, it's very helpful to do a swab and say you have it, and you may manage the patient differently. You're right. In terms of dollars and cents, it can get very expensive to test people constantly. And most sports don't have that ability. I think for youth sports, there are two things. One, the more testing, the better. But if a kid really is sick, fortunately, they tend to do better than older people. It's not like 50 or 60 or 70-year-olds who have a much, much higher risk. I'm not saying they're at zero risk. I'm just saying that overall kids tend to do better. On the other hand, they may have to have fewer games. They may have to test and wait 36 hours and then schedule a game for everyone, twice a week. Playing every day may not be realistic.
Yeah, there's so many big questions. I feel like we're still finding our way here for sure. Dr. Ian Lustbader, great to catch up with you. Thank you so much for your time, as always. Clinical Associate Professor of Medicine at NYU's Langone Medical Center. And as I said at the top, Scarlett, he's been such a trooper with us because this is not a guy who's sitting in an ivory tower by any means. I mean, he has been literally on the front lines. You heard him say he's been in his office every day since January and, treating COVID patients. He's talked to us when he's, been getting ready to go on call. So he has seen this up close and personal, the real damage, and also is just a very clear-eyed voice on all this. So our thanks to him.
That man needs a vacation.
He does. He does. No, but he's,
I mean, he's seen so much since January, and I'm glad that it's quieted down and things are calmer now because you need to catch your breath a little bit.
Yeah, it's a reminder, too, that, healthcare professionals, and I feel like we've lost sight of that a little bit because of just the fatigue that everybody is feeling around this. And, you do hope that, you're right, especially folks in the New York area get to catch their breath a little bit because we do not know what the fall is going to bring. And those stories that are trending high in the Bloomberg certainly remind us that we could be in for a second spike, and we could be in for, a really uneven fall when it comes to school and work.
The long winter.
All of that. A long winter, indeed. All right, let's get down to Washington. Nancy Lyons is there with the World National Headlines. Hey, Nan.
Hey, Jason. House lawmakers have been updated on the federal response to the pandemic, and while the nation's chief infectious disease expert, Dr. Anthony Fauci, sees no end to the virus in sight, he does believe a vaccine is close.
From everything we've seen now in the animal data as well as the early human data, we feel cautiously optimistic that we will have a vaccine by the end of this year and as we go into 2021.
Fauci and other federal health officials are once again urging the public to wear masks and avoid crowds. They say both actions would arrest the spread. Well, the latest snapshot on President Trump's approval rating shows little improvement. Bloomberg's Amy Morris reports from Washington.
Nearly two-thirds of Americans disapprove of how the president has handled the pandemic, civil unrest, and relations with Russia. The ABC News Ipsos poll shows that 3 months before Election Day, Americans do not have confidence in the president, with approval ratings around 34 to 36%. That number is higher, closer to 50%, among members of the president's base. Roughly 1 in 5 Republicans disapprove of the president's handling of the pandemic, the protests, and Russia. In Washington, I'm Amy Morris, Bloomberg Radio.
Television host Regis Philbin, who died last week at 88, has been buried at his alma mater, the University of Notre Dame. A school spokesman says he was buried at Cedar Grove Cemetery on the Northern Indiana school's campus after a private funeral service. Philbin was an enthusiastic alum returning for football games and other events. He gave nearly $3 million to the school to create the Philbin Studio Theater. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much, Nancy. Well, snowbirding, maybe it's just a permanent thing now, Scarlett. It certainly seems that way if you look at some of the real estate trends.
Yeah, there are a lot of people who have always threatened to move to Florida, but they didn't because their jobs were here. Of course, the tax rate in Florida is so much more preferable. No income tax in Florida versus in New York, New Jersey, or Connecticut. But now with COVID and now with the advent of working from home, people are looking to make that a permanent switch.
Yeah, and it's interesting, too, because even as we talk about, what's going on in Florida right now, if you flip the calendar a little bit and you start to think about exactly what we've been talking about throughout the early part of this show, which is the winter coming, being locked up in, if you live in New York City, it's certainly in Manhattan, a small apartment, weather's going to be better down there. Presumably, it's going to turn again. And so would you rather be in Florida, especially given everything that you just rightly described, which is remote work and more room and, not for nothing, no taxes.
No taxes. Purchase contracts in South Florida climbing across all the price ranges last month. That's versus a year ago. At $1 million and above, deals more than doubled in Palm Beach and Broward counties. And Jason, one guy who always knows when to sell high is Cliff Asness, the billionaire hedge fund manager. He just sold his Miami Beach penthouse for $22 million.
Wow.
Although, actually, you know what? That's a significant loss from the $26 million he paid for it just 2 years ago.
Well, there you go. I mean, it's interesting, too. I mean, the inventory, it feels like it's very uneven, and part of it depends on where you look and some of the hot spots, like Miami Beach and South Beach and certainly Palm Beach, although Palm Beach has sort of its own issues having to contend with the president coming and going, and now that's his permanent residence. So we've heard, varying things about that, and there was a great story in the magazine a few months ago, pre-pandemic, about how that area right around Mar-a-Lago had a lot of houses that had been languishing on the market. It feels like less is languishing in general down there now because people are eager to relocate, and it's not just for the winter set anymore. You're listening to Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Final trading day of the month. We've got the Dow, the S&P lower. NASDAQ is pushing higher. Stocks are on track for a winning July, but today we're seeing a sell-off in oil giants. Also, there's concern that a resurgence of coronavirus cases will curb an economic recovery. Right now, the S&P is down 6. That is a drop of 0.2%. The Dow is down 133, down 0.5% off session lows. NASDAQ pushing higher, up 51. That's a gain of 0.5%. 10 years up 430 seconds, 0.53%. Gold up $14 the ounce, up by 0.8% at 1971. And West Texas Intermediate crude up 0.8%, $40.25 a barrel. Just got to mention briefly some of the oil names today after earnings. ExxonMobil moving lower by 0.9%. Chevron down 3.9%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Well, I have to say, if the vacationing Carol Masser were here, she would classify this as a wait, what? Sort of story. It is an amazing read. Danielle Bokov wrote it. She is a reporter for Bloomberg News, but I have to say that title is actually outdated as of this week. She has just been named our new Toronto bureau chief, so congratulations to her on that huge job and well-deserved. She joins us from Toronto, and Joel Weber, the editor of Bloomberg Business Week, he joins us as well. So Joel, tee this up for us because this is an incredible story about golden hands. What?
Yeah, do we get your interest there? This has actually been sort of months in the works, and then the pandemic hit and everything got weird. But the moment that that Danny pitched the story, we were like, wait, what? So we got to rewind the clock a little bit. And in the early 2000s, Nelson Mandela, the South African icon, had basically become an international icon. And as part of that, some people cast his hands in South Africa. And the idea was that they were going to turn these castings into precious metals, gold and others, that they would be able to kind of show around the world and really kind of make his legacy be something that everyone could actually see in person. So that happened, and then it kind of went sideways because he said, I don't want to be affiliated with this anymore. And I'm going to turn over to Danny there because there was an art collector who stepped in and was like, there's only a couple of these around. I'm going to go ahead and just put them all together and make a set. So Danny, who was this guy, and where did the story go from there?
So his name was Malcolm Duncan, and I actually met him 2 years ago. So it goes back even further. In 2018, I was approached by a PR firm representing this South African businessman, Malcolm Duncan, and they were trying to drum up publicity for a sale. And at the time, they had a tentative buyer, Arbitrade, which was a Canadian cryptocurrency company, and at least part of the payment for these golden hands of Nelson Mandela was going to be in Bitcoin. So even then, it was just a bizarre story. And I actually did a short article about the sale at the time, but I didn't have a lot of time to dig into the backstory. And it became one of those stories that you sort of regret never having delved into as deeply as you could have. Then earlier this year, Guernsey's auction house reached out to me through another PR firm to say that they were planning this spectacular event at Jazz at Lincoln Center to introduce these amazing objects to the world. They were going to auction them off, and would I like to cover the auction? So I called Malcolm back. I found out that the Arbitrade deal had shockingly collapsed disastrously. I got more of that backstory. And it just became one of those stories where the more I found out about these things, the more interesting it got.
So what fascinates me here is that you would think there's a lot of demand for things that are linked to Nelson Mandela and also for gold, given where gold prices are trading. But it's been hard for Malcolm Duncan to get a lot of interest for these golden hands. Why is that?
There's been a real taint around Mandela art. I think when he was initially released from prison after 27 years in prison, this whole kind of cottage industry sprang up around Mandela art. And, he had done his own art, but people were slapping his names on everything. And at a certain point, he got fed up with it. He shut it down. There were a lot of lawsuits. And I think to this day, people, in fact, get quite uncomfortable when you bring up the whole tawdry mess of Mandela art in South Africa. So because of that, there had been plans to make just a ton of these things. They were going to be in silver and bronze. There was going to be one for every day of every year that he'd been in prison. As far as we know, and Harmony has confirmed this, Duncan is believed to have the only surviving copies, which are these 4 gold hands. And you're right. I mean, I was there for 2 days at the auction. It wasn't well advertised, but very few people came out. What struck me, though, as amazing was those people who did come out, just how moved they were by these things.
So, Danny, I have to ask about the auction and tell us what went down and where things stand now.
Okay. So the auction was a very bizarre situation. As I said, I was there for 2 days. You know, not very many people came around. Those
and this was
did,
early March
early
in New York, pre-pandemic. Yeah.
Yeah. So, you know, to paint the scene, you imagine it's at Jazz at Lincoln Center. So it's this beautiful, beautiful venue, dark red, sort of jazz playing softly. These things are in these cases, lit from above, and the room is absolutely empty. People drift in from time to time. A lot of them are actually moved to tears when they see them, which was quite something to watch. But most of the people that I saw there over the 2 days were actually people who had skin in the game. They were people associated with the auction. You know, one of the investors of Arbitrate, who now owns 2 of the hands. The ownership of these things was quite complicated. So the auction happens. Only 2 of the hands sell. Everybody's feeling quite flat afterwards, and then suddenly, like at the 11th hour, somebody's on the phone, and it's the buyer, and he says, actually, he'll take the other 2 as well. So this mysterious buyer on the phone ends up paying more for all of the hands than he could have got them for 15 minutes earlier had he just bought them during the auction. It was just bizarre. Everybody was shocked. The auctioneer said he had to sit down. Nobody had seen anything like this. And it seemed like this great, perfect ending to my story, except Malcolm Duncan never got paid. And so...
Oh, man.
I know the twist is just like you're like, okay, well, that, I mean, it's like one of these like thrillers where it's like, but wait, I mean, it's crazy.
It was really crazy. And, you know, you got to feel for Malcolm Duncan. He's like this incredibly colorful character. He tells the most amazing stories, and he has been trying to unload these hands for so many years at this point. Last I spoke to him, the Guernseys, the auction house, says that even though the buyer missed the deadline to pay, that possibility is still out there, that sale is still live, it's still going to happen. Malcolm is very doubtful about this, but he thinks he may have an Italian buyer on the line. We don't know much about that person. So yeah, not a lot of resolution in this story.
No, but it is a tale fit for a Netflix series. I'll just say that. It is amazing. Danielle Bokov, she is our new Toronto bureau chief, newly minted. Congratulations on that. Congratulations on this story as well. As I said to Danielle when I sent her a message earlier, it's a heck of a week to have this story and get that job. So congrats to her. It's a terrific read. Joel Weber, editor of Bloomberg Business Week, he joined us as well. A headline, Microsoft, according to people in the know, in talks to buy ByteDance, the U.S. operations, and we're talking, TikTok, the U.S. operations of TikTok, owned by ByteDance, and that would be a big deal for the kids, as they say. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week continues. If you're listening on 106.1 in Boston, Bay State Business is up next. A lot going on, Scar.
Microsoft, TikTok, it's all just beginning. It's Friday afternoon, but it doesn't feel like it.
It does not.
Bloomberg World Headquarters, I'm Charlie Pellet. We begin with more details on headlines we brought you just a few minutes ago. Sources say Microsoft is exploring an acquisition of TikTok's operations in the U.S. This, according to a source. TikTok is the video sharing app. It is owned by China-based ByteDance Limited. It has been evaluating changes to its business structure because of the U.S. government's national security concerns. Sources say President Trump plans to announce a decision ordering ByteDance to divest its ownership of TikTok. Microsoft shares, they are trading lower right now, down by about 0.6%. The month of July can aptly be summed up in one word, and that is uncertainty. But amid the Federal Reserve's continued vow to do everything to support a shaky U.S. recovery, stocks are on track for a fourth straight monthly advance. Right now, we have got the S&P 500 index trading little change, down by less than half a point. NASDAQ is up 73. That's a gain of 0.7%. The Dow is down 81, a drop there of 0.3%. As for the market backdrop, including tech earnings and oil company earnings, Jonathan Golub is chief U.S. equity strategist at Credit Suisse Securities, and he was interviewed this morning on Bloomberg Television.
This weakening of this bounce is really problematic for industrial companies and mining companies and retailers and banks. And so you have a chunk of the market, maybe a third of the market, that is really susceptible to some of the economic problems that we're having.
White House Chief of Staff Mark Meadows says House Speaker Nancy Pelosi will be hosting a 9 a.m. meeting tomorrow with him, Treasury Secretary Steven Mnuchin, and Senate Democratic Leader Chuck Schumer to continue talks on the next virus relief package. Oil shares lower. Right now, ExxonMobil is down 0.8%. Chevron slumping by 4%. Among some of the other energy names today, BP is down 2.3%, EOG Resources down 0.3%, and shares of Pioneer Natural just turning higher, up now by about 0.1%. Gold up 0.7%. West Texas Intermediate crude down 0.9. I'm Charlie Pellet. That's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, we got a Friday edition of Business Week Economics. I'm Jason Kelly alongside Scarlett Fu, virtually alongside Scarlett Fu. I'm in the burbs, she's in the city. And speaking of the burbs, Yelena Shalecheva, she's out on Long Island. She joins us on the phone, senior U.S. economist for Bloomberg Economics. All right, we're kind of catching our breath, Yelena, after hearing from Jay Powell, some other economic data throughout the week. Of course, that GDP number yesterday that kind of knocked everybody's socks off, not in a good way. And next week, we have the jobs report. Whew. What do we need to be paying attention to?
So let's start with the GDP report. And I think it's very important to note that this is not like all in the past. The epic, I would call it an epic second quarter GDP plunge, which pushed economic activity more than 10% below its recent peak, cannot be discounted as a thing of the past. It will take years to recuperate from such a big blow. What really struck me in the report yesterday was a significant blow to services spending. So, and why it's important is because it will be very difficult to restore. So 2/3 of the decline in GDP was accounted for by personal spending. So just think about that. We're not going to restaurants. We're not traveling. We're not doing all these things we used to do. And given that the amount of uncertainty about the outlook, about what will happen to the healthcare crisis, remains extremely elevated, that means that services spending will not be easy to, to bring back. So that is kind of the biggest takeaway for me from the GDP report yesterday. So, but expanding it into the next week, I think payrolls report will give us another positive number, although not as positive as we saw in May and June.
Right.
But the thing is that it could be a little bit misleading and provide a false sense of comfort to those policymakers that are still haven't extended the stimulus package. And I think that is essential for the economy to go forward.
That's what it all boils down to, doesn't it? The fact that we are going to see these benefits expire soon, and the policymakers in Washington are kind of dithering, getting into their usual discussions and debates and kind of kicking the can down the road. Yelena, for anyone who's doubting the recovery since the second quarter, you look at the personal income and personal spending numbers that came out today. Personal spending rose 5.6%, more than what economists had anticipated. So people are spending, and that is continuing to pick up even as we see COVID cases rise around the country.
But that is coming from a very low base. So that's very important to understand, because, if you just look at the levels, the level is still below, below those pre-crisis peaks. And again, I would like to stress that one more time. We did see a significant rebound in terms of goods spending. So things like auto sales and even reflected in a broader measure of retail sales. So retail sales are almost back to the pre-crisis peak. But a bigger chunk of consumer spending is actually coming from the services sector, and that continues to suffer. So if you compare the two, you will see that the services part of it is really not improving that much. And I'm worried about that, because we need some stuff. We buy food. We buy necessities. We can postpone non-essential services, and that will take time to recuperate.
So what's the data point that maybe we haven't talked about that you and your team feel is important to understand, Yelena?
So I think next week the focus will be on payrolls, and I would stress that it's always important, but obviously it's very important. I think the data that we should continue to look at very closely is jobless claims, the weekly number, because we did see a small uptick during the payroll survey week for the month of July. Will it continue to rise? Will it continue to rise into August? And that would mean we may see a negative reading in the next few months. I would expect that if COVID cases continue to accelerate and if the delay in the stimulus package continues to linger, then we will see a negative print on the payrolls, despite the fact that we may see a positive one in July.
What about wage gains? Before COVID hit, everyone was looking at wage gains for any sign of inflation. There was a great story today about how the job losses because of COVID-19 means a lot of people are looking for freelance gigs, and as a result are taking pay cuts just to get any kind of work.
That is a reflection of simple supply and demand, forces. So if you compare the number of job openings to the number of unemployed, you will see that that supply significantly exceeds the demand for labor. So basic supply and demand movements are telling us that wages will continue to decelerate, if not decline. So unfortunately, that's the case. In the beginning of the crisis, we saw a pickup in average hourly earnings, but that was just an effect of exclusion of those lower paid jobs because people lost their jobs and were not included in the calculation. So those who kept their jobs, which tended to be slightly higher paid, those that they pushed the number higher. Now we see that effect fading, and we see that wage growth is decelerating. Unfortunately, as Chair Powell noted at the press conference, he actually touched upon this for quite some time. He said that we will see continued deceleration in wages.
Yeah, a lot of inputs to consider, and we turn to you to make sense of it. We appreciate it. Yelena Shaletcheva, have a great weekend. Senior U.S. economist for Bloomberg Economics, joining us on the phone. The jobs report next week. Scar, it's going to be one to watch for sure, but we always have to pair it, as I'm glad Yelena pointed out, with those weekly jobless claims as well.
Thursday is weekly jobless claims, and of course the number has not been moving in the right direction. And then jobs report, which is always backwards looking, but gives us kind of the ultimate read on what's going on in the labor market.
Absolutely, and all the commentary that follows it, whether it's from the administration or else, and we think
will still be
debating fiscal. All right. Speaking of Washington and those debates, let's get down to Nancy Lyons. She's in the nation's capital. Hey, Nancy.
Hey, Jason. The nation's top public health officials have been providing an update on the coronavirus pandemic to a House special committee. And as Bloomberg's Irv Chapman reports, they offered updates on containing the spread and developing a vaccine.
Members sought assurance from Dr. Anthony Fauci that a vaccine is coming and it will be approved only if safe and effective.
I know to some people this seems like it is so fast that there might be compromising of safety and in scientific integrity. And I can tell you that is absolutely not the case, that I believe that we can get to that goal.
Dr. Robert Redfield said universal use of face masks and avoidance of crowded indoor spaces would arrest the spread.
We get the same bang for the buck as if we just shut the entire economy down.
In Washington, Irv Chapman, Bloomberg Radio.
President Trump is blaming Democrats for the failure of Congress to come up with a new coronavirus relief plan, even though the House passed a relief bill 2 months ago.
The Democrats do not care about the people of our country. They don't want to do what you should be doing for the people of our country, whether it's unemployment or anything else.
The administration late this week put forward 4 offers, but all were rejected by Democrats. Baseball continues to see a rise in coronavirus cases. Today's game between St. Louis and Milwaukee had to be postponed after multiple Cardinals employees tested positive. That's in addition to 2 other games scheduled for today involving the Marlins, Nationals, Blue Jays, and Phillies that had to be postponed because of an outbreak among Miami players and 2 positive tests on Philadelphia's coaching staff. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. Well, Scar, it's interesting. If you look at the most read news for the last hour on the Bloomberg, the top 2 stories are about ByteDance, TikTok, Microsoft, and the Trump administration. All basically one story here. I mean, this is a big deal.
This is a big deal. And by the way, the terminal clients are not teenage girls who are the biggest users of TikTok.
Yeah. Or boys. I can say, as the parent of 2 teenage boys, at least one of them very into TikTok.
Okay, there you go. I was looking at Microsoft's share price to see if it would respond to any of this news, and it wasn't moving until just now. It did hit the unchanged level. It's back down again just marginally, but it has pared some of its losses and is now near session highs. What I find really interesting here is that Microsoft's strategy up until this point has been to really focus on enterprise customers. This is according to Bloomberg Intelligence. So acquiring TikTok seems to be a strange move beyond that core focus.
Totally. I mean, I truly have learned the most about TikTok from my teenagers more than anything.
And it doesn't compute with Microsoft, right?
No, it doesn't. But I will say it is a juggernaut. I mean, it's unbelievable, how powerful it is. In fact, I was just reading my latest Vanity Fair magazine. You never know what I'm going to be reading, Scarlett.
I like that. I like that reading list.
But there is a whole photo spread with a lot of text as well about all these TikTok stars. And I mean, it's amazing how influential they are. Now, again, how does that fit in with Satya Nadella's Microsoft? I'm not sure.
Or Azure, for instance?
Exactly. Yeah, I mean, they're investing heavily in the cloud. Then again, hard to bet against Satya Nadella right now. I mean, he's done a pretty amazing job there. So maybe he's got something up his sleeve. And maybe this deal doesn't work out. It certainly hasn't come to fruition. And all of this is very fast moving. This is a forced sale, it looks like, spurred by the Trump administration.
You know who can't go in and bid is Facebook after Mark Zuckerberg's comments earlier this week.
Seriously. Great point. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 43 minutes to go ahead of the closing bell. S&P just turning positive. The Dow remains negative. NASDAQ is higher. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. Like you said, U.S. stocks are trading mixed, but trading well off of session lows. Dow's down 82 points, was down 300. S&P's, like you said, little change. NASDAQ is higher by 86. The U.S. 10-year yield at 0.53%. WTI crude futures are up 0.9%. Gold trading higher by 14, and transports fall 62 points. Leaders to the upside in the Dow, Apple and Merck, while Chevron and Caterpillar led to the downside. Also after earnings, Facebook rose 8%, Amazon climbed 4%, and Under Armour plunged 10%. In other news, Microsoft is said to be in talks to buy TikTok, and Adobe plans to ban political ads on its online sales platform. Wrapping things up on the IPO front, Vital Farms opened at 35. IPO was priced at 22. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you, Bill Maloney. Have a great weekend. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. Stocks mixed. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Well, we've gotten very interested, especially of late with the launch of Bloomberg Green, in what's going on in the world of sustainable investing. Luckily for us, we have Chris McNett with us. He's co-head of sustainable investing at Wells Fargo Asset Management, joining us on the phone from San Francisco. So, Chris, it feels like, first of all, thank you for joining Scarlett and myself on this Friday afternoon. It does feel like sustainable investing starting to have a moment. I would guess you would argue it's been having a moment for a while, but it does feel like the aperture is widening a bit in a good way, that more people are paying attention.
Yeah, that's exactly right. And also, it's a real pleasure to be here. I would say that, yes, for those of us like me who have been in this space for a lot of years, it feels like, now we're almost hitting an inflection point where it's really getting into the mainstream. And we've seen the demand really hold up through, the really choppy markets of the first part of the year and really start to accelerate. And I think there's a couple of reasons for that we can go into.
Well, it usually comes down to performance as well. I mean, along with people wanting to increase their exposure to sustainable companies and ESG principles, performance matters. And usually in an ESG portfolios are going to underweight companies in the energy sector and perhaps load up on companies that are in the tech sector. We have a market right now that is all driven by technology, and when it does fall, it's being led by energy stocks. How much technology exposure does Wells Fargo's ESG portfolio or sustainable portfolio have?
Yeah, I mean, performance does always matter at the end of the day. And I think that's what's really starting to draw a lot more interest, is that the performance of sustainable funds have really held up particularly well, not just year to date, but even if you look across longer time periods. And it's true that, a sustainable investing mindset might lead you to underweight energy. And of course, the way that energy has performed, of late, that's kind of been a winning trade. But a lot of the outperformance is coming not from sector misweights, but really from looking at ESG credentials and reflecting that in security selection. So we really go sector by sector when we analyze ESG, rather than try and pick over or underweights to sectors. We really look at particular companies and do that deep research.
So, Chris, I do wonder, what's been the impact, either kind of tonally or demonstrably or quantifiably, I guess, when it comes to COVID-19 and maybe a change in thinking? You referenced some of the choppiness and the volatility in the market, but I do wonder, are people reconsidering kind of where they're investing and how they're investing, just given everything that's going on in the world?
Yeah, I mean, that's exactly right. I think there was a fair bit of commentary that so much of the growth in the ESG marketplace happened since the global financial crisis. That was maybe a bear market luxury, and we've actually seen it not just hold up through the pandemic, but actually really thrive. And what it's also causing, to your point, is a bit of a rethink about what's really valuable from, maybe a values or a moral standpoint.
Like a human perspective, right? I mean, I think people are thinking more about what they're doing for the world.
Yeah, I mean, that's exactly right. And I think it particularly comes down to, employee well-being and human capital. That's always been a concern of sustainable of investors because of kind of the innate morality of fair and decent work, but also the potential performance benefits that can come from it. So we really start to see social concerns, and that can be diversity, that could be, fair and equal employment, really start to rise up the agenda. And, I think that that's something that's probably going to persist, through and beyond the crisis.
Yeah, backing up your principles with your money. Chris, we spoke earlier this week, Jason and I did, with the sustainability chief of Philip Morris International, the cigarette company. And they have a pretty ambitious plan. They are working towards a smoke-free future. They're making changes to their supply chain, zero child labor, for instance, ensuring that 100% of farmers make a living income by 2025, electronic smoke-free devices equipped with age verification technology by 2023. You look at your potential stocks on a security-by-security basis. Would Philip Morris make the cut?
Yeah, I mean, that comes down to a lot of, what investors really value. And at the end of the day, we exist to serve our investors. So some investors probably would have a problem with a company like Philip Morris just because of the types of products that they make, which in many ways, do inflict harm and a kind of a social cost. But if you're thinking about looking at, say, a Philip Morris compared to another tobacco company, then you would look at those types of things that you just spelled out, and then you could use them to assess, which of those tobacco companies or which oil company, are more aligned with a sort of a healthier, more sustainable future. And then in that context, sure, you could have a portfolio where it could find its way in there.
Interesting. All right. Well, we'd love to keep in touch with you. This is really interesting. Chris McNett, co-head of sustainable investing for Wells Fargo Asset Management, joining us on the phone from San Francisco. Listen, I think the dual crises in some ways, Scarlett, have made this more interesting, not just the health crisis, but the social crisis as well, where people are starting to think about equality in a much more measurable way, right?
It's a very conscious decision when it comes to investing now in a way that perhaps wasn't as urgent before COVID-19.
Yeah, absolutely. All right, coming up, chart of the day, song of the day.
Song of the
It's
day.
all happening.
Forget chart, song of the day.
It's the song of the day. Dave Wilson is next. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's all happening, Scar. Friday edition of the Song of the Day and this chart that goes with it. But really, it's all about the song, as you have rightly pointed out.
Everything has culminated to this point.
We've all been marching inexorably toward this moment. It's coming up. The chart of the day and the song of the day. But first, Charlie Pellet. He's still waiting for Dancing.
I am. I'm betting the song of the day, though, anticipation. Here's why. The White House and Democrats planning to meet tomorrow to discuss the next virus relief package. That has met a turnaround for stocks. S&P now up by 6, up 0.2%. Stocks erasing losses amid a rally in tech shares. Right now, we have got the Dow trading lower, down 32 off session lows, down 0.1%. NASDAQ now up by a full 1%, higher by 107 points. 10-year up 2/32 with a yield of 0.53%. Gold up 0.8, 19.72 the ounce. West Texas Intermediate crude oil up by 1%, 42 cents a barrel higher at $40.34. Bottom line, though, stocks are racing losses. 28 minutes to go ahead of the closing bell. While the number of coronavirus deaths in the U.S. continues to soar, progress is being made on vaccines. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health. He was interviewed this morning on Bloomberg Television.
So we're going to start to see data on antibody responses as well as real protection from infection. And that's, of course, the critical bar that we need with these. And I think the other important thing is to note that there are probably 4 or 5 vaccines now that are entering these trials. And so we have a lot of candidates coming through, which increases the likelihood of finding the ones that are working the best and are the safest.
Caterpillar's cost cuts help it make up for slowing sales, but concern of second waves of the coronavirus weighing on the prospects for the rest of the year. Caterpillar shares are down now by 2.9%. It should mention, too, that the Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Busy morning for earnings. Under Armour reported revenue that beat the highest analyst estimate. Shares of Under Armour, though, they are falling now by 7.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, you are listening to Bloomberg Business Week right here on Bloomberg Radio. A little sting on a Friday.
Exactly. I can identify the artist, but I can't tell you what song it is. It's obviously a solo album.
Down so long?
I don't think it's
so long.
Police.
You are right, Jason Kelly.
There you
Congratulations.
go. Thank you.
Well done,
together
Jason.
we made it happen.
There you go.
I love Sting. I'm a huge Sting fan. Love the Police, love his solo stuff. Sometimes it gets a little weird, like the collab he did with Shaggy. That was a little odd, but
that's Sting for you.
But that's Sting.
And then
He's
some
great
of
in
his
concert
classical
too.
stuff too. Let's not
Yeah.
forget.
Broadway musical that didn't do so well, even when he came in to try and save it. But
Which
you know
I
what?
actually saw.
Did
The
you?
Last
And
Ship. I did.
was it good?
Yeah, it was good. Absolutely. You
Yeah.
know? Yeah, if you're a Sting
There's a little
fan,
bit of
you
a
would have
pause
enjoyed it.
there.
Yeah. I mean, it was very, it felt like, it felt derivative, not in a bad way, of the, was it the Island of Souls album, all about like the shipbuilding. I mean, it goes back to like his father and where he grew up, right?
Right. Absolutely. That was the whole premise behind it. But anyway, let's talk about why that song. Because Down So Long could describe the relative valuation of gold and silver when you look at them by comparison with U.S. stocks.
Nicely done.
It's something that comes up because, let's face it, I mean, those precious metals have been on a run lately. You know, you saw a record high for gold this past week. You saw silver at a 7-year high this past week. Nonetheless, it really hasn't done much in terms of changing the relative valuation equation, you might say. And so the chart just basically tracks the ratio of the price of these precious metals to the value of the S&P 500. And when you ran the numbers as of yesterday, you saw that gold was down 64% from its peak in August 2011. You know, and silver reached a high that same month, and it was down 81% as of yesterday. So there's a long way to come back if indeed you are positive on the value of these metals going forward, and there are certainly a few people that are, just given the way that the valuation has shifted over time relative to stocks. So let's face it, I mean, that's a basic sort of comparison people make. Hard assets like precious metals versus financial assets like stocks. So, you know, it's a reasonable kind of comparison to make. And if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
So, Dave, as you look across a week like this, where I feel like there were so many threads to pull in the market, whether it was tech stocks or energy stocks today, specifically big oil, you look at the Fed, like what's the thing that we go into the weekend thinking the most about in terms of market drivers?
Well, let's see. We got through all these numbers, and indeed, it looks like the S&P 500 is going to be higher for the week.
Yeah.
And so that tells you something right there. I mean, a lot of that tied into the technology companies that reported late yesterday. Another thing to bear in mind is, you know, our latest numbers on second quarter earnings for the S&P 500. Now you're looking at a 35% decline, which sounds pretty awful, except we went into the reporting period looking for a 44% drop based on what the analysts were forecasting. So things are looking less bad at a minimum.
It's always relative, right? It's always compared to what the estimates were before we came in. I think we're 60% of the way through, did we say, through earnings season?
Yeah, a bit more than 60% at this point.
What's left? I know retailers at the tail end, but what's left in terms of
We
sectors?
got plenty more left. Let me just take a quick look on
Do we
my
still have
Bloomberg
some
terminal
industrials to get
for
through?
the coming week. Let's see. Just looking for the highlights here. I mean, there are
GE reported already, so, and we know that Caterpillar already
Caterpillar
reported
was
too.
today, yeah. So maybe we have got
I mean, but there are a lot of industrial
retail is going to be
media,
brutal.
Disney.
Media.
Yeah,
there
we
you
get
go.
into media in the coming week. Disney and Fox both on Tuesday, and then you know, some of the insurance companies as well. Humana for health insurers.
Yeah,
CVS Health, if you want to look at that business, considering that as well. You know, a bunch more. Let's just say it's going to be not quite as busy a week as we had this week, but close enough.
Yeah, I mean, I think I think I remember Gina Martin Adams saying that these 2 weeks, this one and last week, were the busiest.
Oh,
so,
yeah, no doubt about it. And we had
certainly
the
yesterday,
busiest
what a
day,
doozy.
you know, this week. So, you know,
Goodness gracious.
But there are
All right.
plenty more to come.
Plenty more to come. We'll be counting on you for all of it, Dave Wilson. No pressure. Great song, by the way, to end the week. That was a really, really good one. All right, we will catch up with you after the close of trading. Dave Wilson, stocks editor for Bloomberg.
He comes back with stock of the day later, right?
He does. He does right after the close. So we'll get that. It's an interesting one. Another name that I had never heard of. Got a sneak peek. All right, let's head down to Washington now. Nancy Lyons is there. She's got your World National Headlines. Hey, Nancy.
Hey, Jason. With no luck on another stimulus bill, White House Chief of Staff Mark Meadows and Treasury Secretary Steven Mnuchin are set to meet tomorrow morning with Democratic leaders Senator Chuck Schumer and House Speaker Nancy Pelosi. Meadows says there are about a dozen issues that have to be resolved for any final deal. With 95 days left to go until the election and his campaign under new management, President Trump has put political advertising on hold.
Advertising Analytics says the Trump campaign spent only $4,700 on radio and TV ads over the last 3 days. That compares to about $6 million for the Biden campaign. The move comes almost 2 weeks after Brad Parscale was replaced as Trump campaign manager by Bill Stepien. The president has seen his poll numbers tumble over his handling of the coronavirus pandemic, the economic fallout, and his response to racial protests across the country. Nathan Hager, Bloomberg Radio.
A special House panel is investigating the coronavirus pandemic, and they heard from federal officials today. Congressman Jamie Raskin of Maryland was among those asking questions to the nation's leading infectious disease expert, Dr. Anthony Fauci.
Is COVID-19 going to magically disappear, Dr. Fauci?
I do not believe it would disappear because it's such a highly transmissible virus. It is unlikely that it's going to disappear.
Does wearing a mask give people COVID-19?
Does wearing a mask give it? No.
Okay.
Not to my knowledge.
All right. Is COVID-19 a hoax?
No.
Fauci does continue to urge the wearing of masks. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thanks so much. So here's a number for you, Scar. You probably already know what it is. $1.5 trillion. Whoa.
$1.5 trillion. That boggles the mind.
Right. Unspent money, so that's committed capital to private equity funds around the world, and they don't have to spend it right away. And private equity managers would say, listen, this is the luxury of private equity is our investors, be they pensions or endowments or rich families, whoever, they give us money to, invest over a few years and deploy when we think it's right. But when you got that much collectively, it starts burning a hole in a lot of those rich pockets.
Exactly. I mean, what do you do with it in the meantime? I mean, I know we cover here at Bloomberg all the stories on what they invest in and what opportunities they see, what sectors and what securities in particular, and the timeline and everything. But they have to use this money. It's a lot of dry powder. They've got to put it somewhere in the meantime. So they park it, and how do you make a return on it when interest rates are this low?
Yeah, I mean, that's the issue. And, and so the mechanics of it, as you know, are like it's committed, so they only call it when they need it. But the reality is that when you're marketing a fund and when you're trying to show performance, you need to be able to show, to your point, that you're doing something for it. And I think it's especially pressing, maybe to underscore your point, that you're getting paid a management fee on it, as you know.
Yes.
And so that also starts to make investors a little bit grumpy because it's like, listen, I'm paying you every year for these, in some cases, billions of dollars, and you just need to do the math on 2% annual fees to understand what that means. And listen, some of these firms have big operations they need to fund, but they do need to put that money to work because the real profits come when they buy and sell.
You also wonder how much they miss out by not being able to travel and check out different businesses, meet up with different investors, right? I mean, they kind of have to sit on their hands. They can use drones, they can use technology, but that's not the same as seeing it up close and personal.
And these are long-term relations. These are like marriages in some cases. So
that's a good way of describing it.
They need to get on the road.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. We begin with two developing stories. A federal appeals court has overturned the death sentence of Dzhokhar Tsarnaev in the 2013 Boston Marathon bombing. Also word from the UK via the Press Association that British Airways pilots will accept job and pay cut packages. Stocks extending their July gains. The Dow has turned around since our last update, now up by 27 points at the worst level of the day. The Dow had been down 300, lower by 1.1%. Right now, the Dow is up 23, up by 0.1%. S&P holding on to a gain with 12 minutes to go ahead of the close, up 0.4. NASDAQ is up 122. That is a gain of 1.2%. 10 years up 3/32 with a yield of 0.53%. Gold up 0.8%. 1972 the ounce. Sam West Texas Intermediate crude up 1.1%. 40.36 a barrel. Stocks advance on a tech rally. I'm Charlie Pellet. That's a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the drive to the close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, it is time for the drive to close. I have to mention one thing, Scarlett, that you'll get a kick out of. I just saw a tweet go by that says, in reference to Microsoft and its potential acquisition of TikTok, someone tweeted, Microsoft is in TikToks. That's funny. That's something only a business journalist, I think, could love. But
There are a lot of things that only business journalists get really excited over, and that's one of them. Any kind of word pun, especially in a Twitter format.
Exactly. It really is. Twitter was made for ridiculous things like that. All right, let's get serious here. It's Friday. Henley Smith is back with us, Senior Vice President, Senior Relationship Manager for Stonecastle Cash Management. Once again with us. He joins us on the phone from Easton, Connecticut. Henley, how are you? How are things in Connecticut?
Yes. Well, very, very well. I'm calling you from rural Connecticut, where we do social distancing. We have it down to a science.
Yes.
So, yes, and I enjoyed that pun as well. I thought that was very clever.
Good. Well, thank you. Thank you. I appreciate that. Yeah, we do our best, to keep it a little light here on a Friday. I mean, it's been an interesting period. Even this week, I was asking Henley, our stocks editor, Dave Wilson, just a few minutes ago, what's the thing that you sort of take away from this week? And I'll pose the same question to you. What's the most important thing as you maybe have a socially distanced cocktail or something, or maybe a Zoom cocktail, whatever it's going to be? What really struck you about the markets this week or the investing world?
Well, it's kind of been ongoing for us as we're dealing with kind of an interesting dynamic. As you know, our focus is the short part of the fixed income curve and cash management, cash investments. And obviously, we're dealing with ultra low interest rates yet again. But the interesting dynamic and the takeaway I have is that cash continues to build up, mostly on the institutional level. And even with these low interest rates, the choices that institutional investors have continue to be limited. So you're seeing a lot of money market funds, prime money market funds shut down. You're starting to see government money market funds limit their investors. And so it's kind of an interesting dynamic where, again, you have all this cash that's kind of been building up as a reserve, as a rainy day fund. It's just, what's going to happen next. And even with these low interest rates, they're having trouble placing it. So the curve really, in short, has really kind of flattened, as we all know, and it continues to compress. But that doesn't deter institutional investors. They're still building cash at this point. So.
They're still building cash. What's going to cause them to make a decision to put it to work? I mean, Jason was talking about $1.5 trillion for private equity. We had Katie Greifeld on earlier talking about CLO ETFs because everyone's looking for some kind of yield. Cash is building up. Cash is sitting there in money market funds. At some point, someone's going to want to commit it to put in something that will tie it up for more than just a day or two or a month or a week. What's going to be that catalyst?
Yeah, again, I don't know what the catalyst. I mean, I think we all know what the ultimate catalyst will be, and that a vaccine that's safe and effective, and we know that that's the ultimate. But yeah, at some point, the cash continues to build. It's going to have to find a place that it can earn a better return. Most money market funds are paying under 10 basis points, closer to 1 basis point right now. Now, again, a lot of our clients still want to have the FDIC insured through our programs, and that's what they're hanging on to right now. But at some point, they're going to move out on the curve or do something that typically, a lower quality asset, and that ultimately might be a second mistake. There's really no premium to extend at this point. I was talking to a client this week, and they said they could place 6-month money at 2 basis points. So, yeah, I'm not quite sure what it is. I think we all know what it ultimately is, but at some point that money is going to have to move somewhere. But right now, it's, I want to stay safe, I want to stay liquid, and I'm not going to move it from there. And if I'm going to pay less for it, as long as I know it's there, I'm happy with that. And that's the message we continue to get from our clients.
So, Henley, talk to me, if you can, about the political scene as it relates to investors, because I feel like, and I've said this on this program several times, in a normal presidential election year, we would really starting to be heating up right now when it comes to trying to figure out from an investment perspective what a re-election or a new administration would mean. Historically, how have you thought about that? How are your clients feeling about it now, given that the presidential election is really just one of several major inputs that are on their minds?
Yeah, I mean, it's been a difficult period nonetheless, just having all this politicized back and forth and all the things that we've been dealing with. And as we've talked about before, it feels like we've just kind of tripped into one crisis after a next after a next. And I think in typical years, you would kind of wait till after Labor Day and then get all excited or not excited or what have you, or kind of do the analysis. But yeah, I think from the very beginning, this period that we've been in, this very unusual period, has been politicized, and so we've been dealing with that back and forth. And but again, I think that kind of focuses and feeds into what we've been doing. That's why you've seen a lot of large businesses just hang on to cash and keep it there, and retail investors as well. I mean, I think they're just going to let things play out and then make a decision, and I think that's probably a smart thing to do.
Speaking of companies with a lot of cash and retail investors, Apple, of course, announcing a 4-for-1 stock split. Jason and I were talking about how ultimately it may be a play for retail investors because you bring down the price of each stock. Do you think that's how investors see it?
I would think so. Again, it even net, it's the same price, but it looks cheaper. So obviously, you see Apple moving up smartly again today. So yeah, I mean, I think that 4-for-1 split will make the price that much more affordable for a lot of people, and they'll broaden out their investor base. And I think a lot of people will gravitate towards that. It's a great name, as we know, and I think if it's cheap on a per share basis, then I think you'll see a lot more people get involved. Yeah.
All right, we're going to leave it there. Thank you so much. Henley Smith, Senior Vice President, Senior Relationship Manager for Stonecastle Cash Management, joining us on the phone, as he pointed out, from rural Easton, Connecticut. Have a great weekend out there. I think it's going to be a little warm this weekend, even here in
It's been warm every weekend, Jason.
I know. It's really been something. I'm going to New Hampshire, and it's going to be in the high 80s there. That doesn't seem normal.
Well, what should it be? 70s, 60s?
Yes, like high 70s at best in New Hampshire. I don't know.
Well, welcome to 2020.
I know. Yeah, seriously, everything's a little bit hotter. All right, we're going to get you to the close of the week. I mean, as we look at it, Scar, we're going to dig in deep to some movers and shakers, but the S&P and NASDAQ, they're going to finish in the positive, I believe, for the week. Just taking a quick look. Yep, the Dow just off for that 5-day period. So
and guess who's leading, Jason? Of course it's the technology stocks, right? The NASDAQ up 1.3%. The Russell 2000 lagging behind, down 1.25%.
Big tech, baby. We'll get into it. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it. Sound of the closing bell at the New York Stock Exchange as we wrap up trading on this Friday, July 31st, and it is on to the weekend and on to the trading month of August. The Dow, the S&P, and NASDAQ all surging, closing at their best level of the day. Stocks extending their July gains amid a rally in technology shares. And on news, the White House and Democrats are planning to meet tomorrow to discuss the next virus relief package. Treasury 10-year yields headed toward a record low. We've got the 10-year with the yield right now 0.53%. Here are the equity close numbers. S&P up 25, higher by 0.8%, bringing its year-to-date gain to 1.3%. The Dow Jones Industrial Average rallied 115 points today, up 0.4%. NASDAQ surged 157 points, up 1.5% in the year-to-date column on the Bloomberg. NASDAQ is now up by 19.8%. So a late session rally today. The Dow, the S&P, NASDAQ 100, all pushing higher. Apple surged 10.4% today. Apple briefly became the world's most valuable company with its market value overtaking Saudi Aramco. Apple higher after announcing earnings and a stock split. Henley Smith is Senior Relationship Manager at Stone Castle Cash Management. And right here on Bloomberg Business Week, he was asked what that stock split will mean at Apple for retail investors.
Yeah, I mean, I think that 4-for-1 split will make the price that much more affordable for a lot of people, and they'll broaden out their investor base, and I think a lot of people will gravitate towards that. It's a great name, as we know, and I think if it's cheap on a per share basis, then I think you'll see a lot more people get involved. Yeah.
And again, Apple ending the day at $425.04, up 10.4%. Amazon shares rallied 3.7% today after earnings. We saw Facebook jumping 8.2%. Alphabet on the minus side, down by 3.2%. Gold up 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Wild thing, think you move me.
I got a few moves I know you'll like.
Oh, come on, Simone. Shake him. Let's do it.
Just move on toward your destination.
I can make things move without touching them.
Shaking all over.
Bloomberg Business Week. Movers and Shakers with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, let's do a little movers and shakers. The end of the week brings a nice little rally to round it out Scarlet Fu, and kind of amazing to look at a sort of breakdown of the S&P specifically. Even with that late day surge, it was driven by, it looks like, a smaller number of names, because when you break it down, 231 names up, 272 down, actually, 2 unchanged. Certainly a big part of that was Apple. Got to talk about that. We talked about it with Henley Smith, and you rightly brought up, I mean, it reminds us that the retail investor still does have, and maybe even more so now, a pretty important role to play here.
Absolutely. I mean, by splitting your stock 4-for-1, yesterday Apple was trading below $400. So 4-for-1 split would have brought its stock price below 100. Of course, today's $40 gain, $40 means that 4-for-1 split keeps it above the $100 level, but it appears cheaper.
Yeah.
I mean, obviously, they've diluted it for those who are existing shareholders, but for new retail investors who may not have been able to get in because it was a little bit unaffordable, now they have a way in. And the stock soaring 10.5%. I mean, this is a massive company, a 10.5% gain. Wow.
Yeah. Well, and as Charlie pointed out, I mean, for a little bit there during the trade, it actually became the world's most valuable company ahead of Saudi Aramco, the newly public, of course, big oil company, big energy company there in Saudi Arabia. And speaking of oil and speaking of energy, I mean, big oil just took a big hit today.
You know what was once the world's most valuable company? ExxonMobil.
ExxonMobil.
Yeah, not anymore.
Exactly right.
The market
Exactly
value
right.
of ExxonMobil is now 1/10 of what Apple is worth right now. And this is after ExxonMobil reported a huge loss in the second quarter, $1.1 billion deficit after posting a $610 million loss in the first quarter. Exxon, Chevron, they have these integrated business models where they're meant to be protected no matter if oil prices rise or fall. But Production got a hit or took a hit because of lower oil prices, and refining also took a hit because of less demand for all the products that they refine, whether it's jet fuel, whether it's gasoline, whether it's, I don't know, plastic bags that use oil as a raw material.
Yeah, that demand slump. I mean, I love the headline on our Bloomberg write-up combining those two, Exxon Chevron earnings gutted by virus-driven oil demand slump. It's totally true. I mean, it really is just a brutal 1-2 punch there for those big oil companies. What else are you looking at in terms of names?
Well, I'm also looking at Kansas City Southern because it's up by 9.7%. The Wall Street Journal reporting, that's right, 2 buyout firms are considering a joint takeover bid for the railroad, Blackstone and Global Infrastructure Partners. So putting some of that $1.5 trillion in the industry to work.
Yeah, it's interesting. I actually wrote a magazine story about Global Infrastructure Partners, GIP. That actually, its history, I don't know if you know this or not, it originally was a joint venture between GE and Credit Suisse.
Oh,
There's
wow,
a guy
way back
who
when.
runs it, who, Adebayo Ogunlesi, he is a director at Goldman Sachs, so incredibly well-known, well-heeled. He is Nigerian, I believe, and was very high level at Credit Suisse, and then went out and created this, which is now an independent private equity firm. They have owned airports across the world. It's one of the most successful, it probably is the most successful infrastructure investor on the planet. So the story that I wrote for Bloomberg a couple years ago was actually about what they had done at London Gatwick and London City Airport.
I remember that story.
Yeah, really, really interesting firms. So keep an eye on them because, and that sort of tag team with Blackstone would really be something. And that would be with debt included, according to the Wall Street Journal's reporting, a $21 billion deal. So that would be one of the biggest buyouts we've seen in a long time. All right, let's look quickly at volatility. The VIX down almost 3% today, closing at 24.03. This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, Mr. Wilson!
Hey, Mr. Wilson. Dave Wilson back with us with your stock of the day. Fluidigm? Is that how you pronounce it?
That's it, Jason.
Hey.
Well done. The company is a supplier of products used to study cancer and other diseases. They make integrated circuits that use fluids rather than the electricity that powers semiconductors. Fluidigm was founded in 1999 and went public in 2011, the ticker FLDM. The company's shares were initially sold at $11.50 each and have tended to trade for less in the past 5 years. This past March, they fell as low as $1.17. Now, Fluidigm has rebounded since then as it has started playing a role in COVID-19 testing. The company filed for U.S. clearance last month for a saliva-based test, and other companies are working on alternatives that use its fluid technology. Fluidigm just expanded its role by signing a contract with the U.S. National Institutes of Health. The agreement provides the company with initial funding of $12 million. It's part of a larger program to expand COVID-19 tests. Fluidigm shares soared as much as 58% in response to the award and reached their highest price in about a year. They closed with a gain of about 20.5%.
And like most of these biotech type companies or smaller companies, this is a company that has not posted a profit. It's been losing money, right?
Well, let's see. You look historically, just at how Fluidigm has done, and yes, indeed. I mean, a history of losses. You know, so I mean, $12 million doesn't sound like a lot, but you know, for a company that's trying to build its business, I mean, their revenue in the first quarter, just to give you an idea, $27.5 million. So it's not an insignificant amount of cash, with a possibility for more down the line.
All right. Thank you, Dave. The really big news, though, let's be honest, is that now via Spotify, you can get all of Dave Wilson's songs of the day that go with his chart. They're all there for the month of July. That's great weekend listening, Dave.
Do you update it every month, Dave?
Well, this is brand new, Scarlett.
It's the first time he's done it.
Oh, I see.
It's a first-time thing. I suppose there'll be another one for August and going forward. And so, it's been suggested before, and I finally found out how easy it is to make playlists on Spotify. So what the heck?
Exactly. Love it, Dave. Thank you so much. All right, let's get to Denise Pellegrini now. She's got world and national headlines. Hey, Denise.
Hey, next time you see Dave, though, I want his autograph for that to go with my playlist collection. That is awesome. Well, we are watching developments on that whole ByteDance thing for you as well. Sources saying Microsoft in talks to buy the owner of TikTok, and the White House wants ByteDance to divest its U.S. ownership, because of security concerns. You guys may be taking the day off tomorrow, but White House Chief of Staff Mark Meadows, Treasury Secretary Stephen Mnuchin, and Senate Democratic Leader Chuck Schumer won't be. House Speaker Nancy Pelosi hosting them 9 a.m. sharp tomorrow morning. They'll keep talking about getting that virus relief package out to the American people. Meadows, though, blaming Democrats for the lack of progress.
The Democrats are willing to play politics at a critical time in our nation's very dire circumstances as we deal with this pandemic.
Of course, as we've been talking about all day, that extra $600 a week unemployment insurance runs out today. COVID-19 deaths skyrocketing in Florida, uptick in New Jersey, deaths in California slowing, UK's Prime Minister Boris Johnson scaling back planned reopenings.
Until the 15th of August at the earliest, casinos, bowling alleys, skating rinks and the remaining close contact services must remain closed. Indoor performances will not resume. Pilots of larger crowds in sports venues and conference centres will not take place, and wedding receptions of up to 30 people will not be permitted. But
And you've got it all there. Global news 24 hours a day, on air and on Bloomberg Quick Take. I'm Denise Pellegrini. This is Bloomberg.
All right, Denise, thank you very much. Well, Scarlett, you have teenagers, I have teenagers, and I have to say, they don't always do the right thing. Sometimes they get in trouble, but there's trouble, and then there's trouble. A Florida teenager is in trouble.
Yes, a 17-year-old, 17, was charged today in Tampa because remember that Twitter hack back on July 15th? It compromised Jeff Bezos' accounts, Joe Biden's account, Elon Musk's account. This 17-year-old boy was responsible for it, apparently. He just graduated from high school, and now he's facing 30 felony charges for hacking those accounts and posting those messages where he basically asked people to send money to a cryptocurrency account, and he would promise, or Elon Musk would promise to send double back. Well, Graham Ivan Clark is in a bit of trouble right now.
He is. The federal authorities also announcing charges Friday against 3 people for their roles in the attack, 2 adults and a juvenile. Mason Shepard, who's 19, another fellow who they did not know. Oh, I'm sorry, Nima Fazeli, 22, and then there was another juvenile who was charged in this. I mean, this really kind of rocked people in many ways. It was very notable. It was a little bit embarrassing for Twitter. You mentioned some of the folks. Kanye, his Twitter account was hacked. Bill Gates, Obama, former President Barack Obama. It's a big deal.
It's a big deal, and people were worried that this was a precursor to something bigger, especially before the election. They were thinking maybe there were state players involved, right? Maybe it was state-sponsored. No, it was a teenager in Florida, accompanied by a, 19-year-old and 22-year-old?
Yeah, and one other kid.
What does that say about Twitter security?
Well, that's the thing. I mean, that to me is the most worrisome piece of it, at least on first glance, is that it actually wasn't state-sponsored. And so if these guys can pull it off...
From their parents' bedroom or garage or basement.
Exactly. Whatever it's going to be. So very worrisome, especially as we look ahead to the election. You are listening to Bloomberg Business Week. Much more ahead. And this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelleton. Up Friday, up week, up month. The Dow, the S&P, and NASDAQ all advancing. Stocks extending their July rally amid a surge in tech shares. Also on news, the White House and Democrats are planning to meet tomorrow to discuss the next virus relief package. S&P today up 24 points. That was a gain of 0.8%. The Dow Jones Industrial Average climbed 114, up 0.4%. Tech stocks the standout today. NASDAQ surged 157 points, up 1.5%. Apple after earnings, and that stock split up 10.4%. Amazon up 3.7%. Among some of the other tech names with earnings last night, Facebook up 8.2%. Google slumped by 3.2%. Alphabet, of course, the parent of Google. 10-year yield 0.53%. Gold up 0.9%. 1973 the ounce. West Texas Intermediate crude up 1.2%. 40.41 a barrel. Again, recapping, equities push higher, closing at or near session highs. S&P up 24, up 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We are going to talk about education. It's something we've been talking about all week because we're getting closer to August, Jason, and that means it's time to kick the kids out of home and hopefully go to school, except we don't know what school will look like.
Totally.
So let's talk with Matthew Mugo Fields. He is General Manager of Supplemental and Intervention Solutions at Houghton Mifflin Harcourt, which is, you and I both know it as a textbook company, but really has become a learning company with some digital offerings as well. Matthew joins us by phone from Boston. Matthew, before we get to what HMH is doing right now, let's talk a little bit about what the situation looks like in Boston. Are schools going to be open? Is there any visibility into the kinds of plans the city is making?
Hey, Scarlett and Jason, thank you so much for having me on the program. Yes, Boston is like many other places around the country where there's tons of uncertainty right now about what's going to be happening, both in terms of the school system and almost school by school, neighborhood by neighborhood. I can tell you that school leaders are preparing for sort of one of three scenarios. Either all virtual to start, and that probably will be the case in many places. And then they're also looking at what they're calling sort of a hybrid model where kids will be on site for part of the time and online for the other part. And there are a few places that are planning to go back full time. But I would say those tend to be the exceptions right now.
Well, and Matthew, I mean, what's interesting about this is you're also the co-founder of Innovation for Equity. And you know, going back to school, and, you know, Scarlett and I are very fortunate to live in the New York suburbs, and our kids, I believe your kids go to public school as well?
They do.
Scar?
Although one might switch to private school. I'll talk to you about that later on.
There you go. But, you know, we have great educational systems here. We have access to great teachers and all of that, but not everyone does, and not everyone has access to technology and all of these different things. How do we begin to even think about solving that, Matthew?
Yeah, it's a great question, and I'm glad to hear your focus on it. In fact, you know, one of the things that COVID-19, the crisis, has done is really sort of shone a light on issues of sort of inequity that have existed for far too long in our education system. So you mentioned access to devices, and that's a real challenging issue. It also is accompanied by, even if you have a device, you have access to the internet all the time. And really, those are sort of, you know, basic infrastructure needs that more and more students need in order to have them learning and addressing learning needs. But that's kind of where it starts. You know, in my day job at HMH, we're very focused on working with school systems to make the most out of the virtual learning experience. You may have seen we announced this week the launch of a new platform that helps schools put all their curriculum and teacher training under one platform. And that's important, and we've got to do that, and we've got to address the infrastructure needs. But we've also got to recognize that we're in the midst of a global pandemic, and our teachers and our students also have some deep social, emotional learning needs that need to be also addressed. And so we're always prioritizing that, we think actually one of the ways to improve equity is actually getting at these social emotional learning needs.
Sure, definitely. I wonder, Matthew, in both your roles as co-founder of Innovation for Equity and at your day job at HMH, how much training do you provide educators, teachers to use these digital tools and virtual learning tools? And I ask that because a lot of the kids are accustomed to relying on screens and being on a Zoom call or a conference call or talking to their peers virtually. But a lot of the teachers, just based on what I've seen over the spring, were not comfortable instructing students in a virtual format.
Yeah, it's a challenge. Not for everyone. There's some teachers that are really adept at using technology, and that needs to be acknowledged. In fact, we learn a lot from those teachers. As part of the HMH Anywhere platform that I mentioned earlier, we've included a new platform for teacher training we call Teachers Corner, which focuses a lot on helping teachers understand how to practice effective distance learning and distance instruction. So it's a key part of what we're focused on these days. We know that many educators are really thirsty for that. Separately, as in my role as one of the founders of Innovation for Equity, which is a nonprofit organization that's focused on finding innovative ways to address the learning needs of Black learners in particular, one of the groups that, as you think about issues of equity, have really been underserved historically. That's also a big focus of ours, is helping teachers really bring sort of the best kind of, and a lot of that good pedagogy has to do with making sure that teachers themselves are challenging their own assumptions, their own biases, et cetera, and addressing the work that they need to do to become educators who hold all students to high standards and high expectations.
Yeah, and realistically so. Yeah, really important. Great work. We really appreciate it. Matthew Mugo Fields, General Manager over at Houghton Mifflin Harcourt, as well as the co-founder of Innovation for Equity. He joined us on the phone from Boston. Listen, this is all of it, Scar. I mean, you and I worry about this as parents, but I think also just as members of society.
Yeah, exactly. How do we move forward from here? If this is going to be our new normal, we better figure out how to do this the right way, because over the spring, it was a real hodgepodge, right? I mean, a patchwork system that I think for a lot of people, it just didn't work out.
No, absolutely. And if you and I are struggling with this in our families, it's safe to say that lots and lots of folks are. All right. Someone who's not struggling, Elon Musk and Tesla and his investors. We're going to get into what's going on with Tesla. Could be in the S&P 500 soon. That's ahead. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Coming up, Tesla. Hat tip to you, Scarlett, because we absolutely need to talk about this name before the week is up.
Tesla has gained 242% this year. It's the third best performer in the NASDAQ 100, but not in the S&P 500. But maybe it'll be soon in that index.
Exactly. We're going to check in with Ed Ludlow. He's one of our faves. But before we get to that, Charlie Pellet, he's got all the headlines. Hey, Charlie.
Well, hello there. Tesla shares lower today by 3.8%. This is the Dow, the S&P, and NASDAQ. We're all rallying. We begin with this headline from the Bloomberg Professional Service. The U.S. outlook has been revised to negative from stable by Fitch. Fitch sees the U.S. economy contracting by 5.6% in 2020. Also sees the U.S. deficit narrowing to 11% of GDP in 2021. Kansas City Southern shares surged 8.2% today after the Wall Street Journal reported that two buyout firms are considering a joint takeover bid for the railroad. Blackstone Group and Global Infrastructure Partners are said to be exploring a deal together that could be worth more than $21 billion. Stocks extended their July rally amid a surge in tech shares, and on news, the White House and Democrats are planning to meet tomorrow to discuss the next virus relief package. S&P up 24. That was a gain of 0.8%. The Dow up 114, up 0.4. NASDAQ up 157, a gain of 1.5%. 10-year up 430 seconds with a yield of 0.53%. Gold up 0.9%, now at $19.73 the ounce. And West Texas Intermediate crude up 1.2%, $40.41 a barrel. Well, as for the market backdrop and the market momentum, Seema Shah is chief strategist at Principal Global Investors. She was interviewed this morning on Bloomberg Surveillance.
Our concerns is that, a lot of that momentum has already started to plateau. When you look at the high-frequency data, it's really worrying, and you can see that it's very much tied in with cases. So wherever we look, whatever outlook we may have about monetary policy or even fiscal policy, unfortunately, it's still tied into the health crisis. And until we can find a way of breaking the connection between mobility and cases, then I think we're going to be in a very difficult spot.
On a day when technology shares were surging, it was a retreat for oil today. ExxonMobil and Chevron posted the worst losses in a generation after the pandemic, and a global crude glut combined to batter almost every part of their businesses. ExxonMobil shares lower today, actually turning around late in the day. ExxonMobil up by 0.5%. It was Chevron that was lower today, narrowing its loss to 2.7%. Among some of the big oil names, BP down 1.8%, EOG Resources up 0.6, and Pioneer Natural up today by 1.1%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Now, I know Charlie said that Tesla shares fell on the day, but they started the year at around 420, and that's an interesting number because Elon Musk likes that number when it comes to Tesla, and they're trading around $1,400 a share. Just remarkable. Ed Ludlow is a Bloomberg News autos reporter, and Ed, things are going right for Elon Musk and Tesla. I mean, they had blowout results. They basically have fulfilled the prerequisites needed to be included in the most influential stock index in the world, the S&P 500.
So it depends on whether you look at this as a box-ticking exercise or you buy into the kind of big-picture Tesla story, right, which is that Tesla drives the shift to sustainable energy, and that if anyone is going to drive EV adoption globally, it's Tesla. The S&P 500 thing is a two-sided story. There's the market mechanics story, right, where, as my colleague Sarah Ponchek reported in Business Week, by being included, if they're included in the S&P 500, you bring the passive funds and many of the active fund managers that track the index into play. They have to buy into that stock. Now, of course, Tesla's seen this incredible gain this year, but it also experiences big bouts of volatility. And if you bring those institutionals into play, what street analysts were telling me prior to earnings was that will bring some stability to the stock. But the other half of it is just reputation, right? Tesla is this incredible company. In 2014, they had a handful of employees, very little revenue, certainly not any profit. Now they're more consistently profitable. Elon Musk said today on an automotive news podcast they might hit 65,000 global employees by the end of this year. So the other part of this this bigger picture story when it comes to the S&P 500 inclusion is one of prestige, right? They've been hammered constantly for not being profitable. They've been hammered for missing on delivery targets. They've been hammered for their rate of growth. But in this most recent quarter, in the COVID quarter of all quarters where the world was kind of falling apart,
yes,
they seem to have pulled it off.
And so how have they defied all the skeptics, and why did the skeptics remain so rabid here, Ed?
So we started writing about this in January. I think one of the big factors was this idea that eventually the big European automakers would show up. Your Volkswagens, for example, or here in America, GM and Ford, they would show up. They would bring more affordable electric vehicles to market, and they would compete with Tesla. And that narrative went on for so long. And if you remember, yes, 1,400 the shares now, but remember the surge at the beginning of the year. And I think that at that time, that's what we were talking about. And yet here we are. No one has showed up. There is not really a competitive electric vehicle to take on Tesla out there. And so what happened in this most recent quarter, if I'm reading what the analysts are saying in response to what investors are saying, is the narrative changed from Tesla is going to be caught up with, somebody is going to catch Tesla, to now this is all about Tesla accelerating its own growth and consolidating its position in the market, extending its lead over the European automakers and the big US automakers, not necessarily, that gap closing. And Elon Musk kind of talks about it. It's crazy. We've been so obsessed with this word profit. Will they achieve a profit and be included in the S&P 500? But what Elon said in the earnings call, and this seems to be more important, is now that he really wants to focus on accelerating growth. He said that they want, yes, a slight profit. They want to deploy capital. And they ended the quarter right with this amazing global reach. Shanghai is back up and running and growing. Germany, the plant is groundbreaking is underway. They're building, and now a new factory in Austin. And it's kind of ironic, right? That this idea of profit. So what? Tesla is in grow mode. It's on the front foot. It's adding to its product line. It's adding to its global reach. And that big overhanging question that surrounds all automakers, but particularly Tesla, demand. According to Elon Musk, demand is robust, and that right now demand is outpacing their ability to supply.
Is there any talk at all that Elon Musk might not be the right person? I guess that's not the case when the stock has done so well, but then you look at, and Jason, I know you've seen this, how Tesla crashed its site with its shorts that pokes fun at 420. Very quickly here.
I think, we're always watching to see which side of the line Elon Musk is on. He is pushing the boundaries. Although, this morning when I was listening to the podcast Automotive News, he was all business. And I think that, he has started to deliver. He does deliver, right? He just doesn't always deliver on the same timeline that he says he will.
Yeah, and that's the beauty of it. And that's the beauty and the madness, it seems, of Elon Musk. All right, Ed Ludlow, great to catch up with you. Thank you so much, as always, for the insights. Let's get over now to Denise Pellegrini. She's got the latest when it comes to world and national news. Hey, Denise.
Hey, Jason, thank you. Well, sources say Microsoft is in talks to buy that owner of TikTok. I'm talking about the Chinese company ByteDance. The White House wants it to divest its U.S. ownership. It's got security concerns. COVID-19 deaths in Florida surging to an all-time high, and cases jumped in New Jersey again today. Governor Murphy says people need to control themselves.
Everyone who walks around refusing to wear a mask, or who hosts an indoor house party, or who overstuffs a boat is directly contributing to these increases. This has to stop, and it has to stop now.
And on the aid talks for Americans, House Speaker Nancy Pelosi hosting Treasury Secretary Steven Mnuchin and others tomorrow morning about a possible pandemic relief package. A 17-year-old from Florida has been charged with hacking the Twitter accounts of former President Obama, along with Joe Biden, Kanye West, Bill Gates, Elon Musk, who you were just talking about, others have been charged as well. And the giant Asian hornets, a.k.a. the murder hornets, are here, guys.
This detection, unfortunately, means that we did get a nest that was able to establish somewhere there in the Birch Bay area.
That's Birch Bay, Washington State, and Sven Erik Spichiger, managing entomologist for the state, says Gotta catch them before they start breeding. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Denise Pellegrini, and this is Bloomberg.
All right, Denise, thank you so much. You are listening to Bloomberg Business Week. Well, not just one private equity story, but two, actually sort of three in some cases.
Friday bonus.
In some ways, yeah, Friday bonus. Can't get enough of it. Carried interest. You and I have followed this for years and years. Hedge funds and private equity funds, it's one of the ways they get so rich making their investments. The IRS and the government have long decried it. Republicans and Democrats alike have long said this is a loophole.
It's been an election issue.
Yeah, totally. I mean, an election issue on both sides. It was a big issue when Mitt Romney, former private equity guy, ran against President Barack Obama, who
and
won
even in
re-election
2016 as well. President Trump talked about it.
Absolutely. Well, it seems that the IRS is going to restrict a loophole, or at least a workaround, I guess I should call it, that some hedge funds especially have used to get around one of the ways that they were trying to kind of pin these guys in on carried interest, which was basically they were converting to an S corp in order to not be subject to this tax treatment. So it's an interesting read by Laura Davison on the Bloomberg, one of the most read because everybody cares about how Wall Street makes money.
Well, yeah, and of course these Wall Street guys are leading the charge in terms of the billions and billions that they print. I don't want to say daily, but in the case of some of them, probably.
Yeah, absolutely.
What's interesting here, of course, is that the hedge funds, the private equity firms, they're always going to be a step ahead.
Totally.
They're looking for the next workaround. Don't want to use the word loophole because obviously what they've done is totally legal. And they'll continue to look for ways to maintain their competitive advantage.
Absolutely. This is how these guys, the top guys, became billionaires, is based on this model.
Mm-hmm.
And as you say, totally legal in many ways. But what it does is, very simply, it allows them to be taxed at a lower tax rate than ordinary income, a capital gains, a blended capital gains tax rate for their
Versus
investment profits. And Warren Buffett has decried it. Others have as well, but it's still on the books. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks advanced amid a rally in big tech, as well as optimism about stimulus talks. The White House Democrats do plan to continue negotiations tomorrow, and Microsoft, as we've been reporting, said to be in talks to buy TikTok. S&P up today by 24 points. That was a gain of 0.8%. The Dow up 114, up 0.4, and NASDAQ up 157, up 1.5%. 10-year up 4/32, yield 0.53%. Gold up 0.9%, 1974 the ounce. West Texas Intermediate crude up 1.3%, 40.42 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Well, delighted to have back with us Aidan Moat. He is the Chief Executive Officer at Hazel Technologies, joining us on the phone. And we caught up with you, Aidan, I believe, last summer, talking about combating food waste, a really important issue. Today, I am delighted to talk to you about something very close to my heart, which is how do I keep my avocados better for longer? I love avocados so much. It's National Avocado Day. So happy to have you with us. What's the secret here?
What's the secret? Well, as we discussed last time I was on, Hazel Technologies offers a brand new look at how to extend the shelf life of produce using our proprietary, non-contact, and totally atmospherically based system to extend produce shelf life. So what we've done here, we've partnered with the world's largest grower and shipper of Hass avocados, Mission Produce, a fantastic company that's really led the market in innovation in the avocado space. And by working with our existing Hazel technology and working within their global supply chain, we've been able to create a program that we've called AvoLast that'll deliver longer-lasting avocados to the consumer while actually improving the consumer experience when they go to eat that avocado.
Okay, so explain to us how this works. How do you extend the shelf life of an avocado so that Jason can enjoy it, a week from now, 2 weeks from now? How much can he wait?
Yeah, so the key here is to remember that an avocado is a living, breathing organism, right? It's biological. Produce is actually alive when it travels. So what the Hazel platform allows us to do is we're able to introduce active ingredients into the storage atmosphere of the avocados that enable us to sort of take control of that aging process. We're actually able to control the rate of metabolism, the rate of respiration and transpiration, and other key biological processes that dictate when the avocado gets ripe and when the avocado gets overripe and is therefore inedible. So this is part of the importance of working with, a supply chain leader like Mission. There's a lot of points we have to hit, right? Everything is about, hey, here's a shipping segment. It's 3 days, 5 days, 10 days. Hey, it gets to the retail shelf. There's going to be temperature changes. There's going to be atmosphere changes. It's going to sit on a retail shelf for 48 to 72 hours. And then we have to be able to target an eating window for the consumer. And that's really what you care about most, right? Is how long do I have to eat a perfect avocado? Well, what we found is using this technology in the storage and transit process and modulating this metabolic rate, we're actually able to extend the eating window of the ripe avocado even after it gets past the retail shelf point. And to that effect, we're basically doubling to tripling the ripe eating window for the consumer. So you would typically have something like 2 days to eat an avocado. If you're in New York, maybe even a little bit less than that. It's a famously challenging supply chain. And we're adding an extra 2 to 4 days of ripe eating time to that window.
You are speaking my language, Aidan. This is fantastic. I mean, and beyond me as a consumer and a greedy avocado eater, my wife would tell you that I would eat an avocado every day if possible, and sometimes I do, and I have no apologies for that. It's a great food. It's a superfood. But I mean, this has real implications in terms of both managing the supply chain, but also managing food waste, which, as I referenced, we talked to you about a year or so ago, and that's really important. I feel like it's even more important now, given everything that we've seen during the pandemic in terms of how and where and when food gets to people. And, we hear these horror stories amid a world where people are still going hungry, of food essentially rotting and being thrown away. Tell us sort of how technology can help us avoid some of that.
Absolutely, and it's been a unique focusing lens, this COVID-19 situation, for where are the weak spots in the agricultural supply chain that magnify some of these problems. So, look, food waste is a tremendous problem, and I'm sure you guys have heard all kinds of stats about it, but we throw away about 1/3 of all the food that's ever grown or produced before it gets eaten. It's an enormous number. If food waste was a country, it would be the third largest emitter of greenhouse gases, right behind the U.S. and China. That's how big a problem. It's $1 trillion, $2 trillion waste problem, enormous in scale. In some ways, I would argue it may be the single largest solvable challenge that humankind has ahead of it. And now when I say solvable, what I like to do is I like to focus on the elements of the supply chain that we need to improve in order to truly revolutionize and make more sustainable the agricultural supply chain. So, you got this unique scenario, and of course, The Guardian reported on it, New York Times reported on it, Bloomberg reported on it, where just a few months ago, we had millions and millions of pounds of food in this country going to rot at a time when an unprecedented level of demand was popping up from food banks and donation drives trying to service food deserts and really even just the majority of the population of the United States. And you have to ask yourself the question, how can those two things coexist? How can they be happening at the same time? And so the answer that I have to that is, look, we're throwing away all this food because we don't have a production problem in the world. We're already producing enough calories. We have a distribution problem. We have an issue where production is highly centralized, and it has to cover large geographical distances, and that requires very complex logistics from all of the producers, all of the distributors, and all of the retailers. And that's where the waste is getting built in. So if we can provide a tool that makes a value add out of those complex logistical processes. And by that, I mean, we at Hazel specifically focus on the idea of functionalizing storage and transit spaces to actually extend the shelf life during that process that could be perceived as harmful. We want it to be a value add. Then we can overcome those difficult legs of the supply chain that result in there being mismatches between the supplier and the folks who actually want to eat the food that's being grown. And so that's how we view our role in that process.
Okay, the product that we're talking about here is about the size of a sugar packet, and it would extend the shelf life of not just avocados, but other fruits as well, grapes and mangoes. Hazel, I understand, is funded by the U.S. Department of Agriculture. So would this be available to other countries if they were interested in it? How would that work?
Well, so note that our funding is only in part through the USDA. So we're a venture company. We've got quite a few interested parties, including international investors. And so, we've always positioned ourselves in such a way that we believe the food system is international. And, to that point, think about where the food comes from that you eat in North America, right? North America only grows during half the year. We're in the Northern Hemisphere. We grow from about May to September. So practically every North American growing company is either in partnership with or has a sister company in South America where the growing seasons are reversed, and that's how we're able to get food year-round. So from the get-go, we've always viewed food waste as an international problem. And more than that, there's more opportunities out there in the world than even just in a highly industrialized country like the United States, because we've got a pretty good lockdown on our supply chain. We have end-to-end cold chain technology and quite a lot of infrastructural investment. But the same can't be said of other major agronomies, areas like China or India, many countries in Latin America, where human capital tends to be more prevalent than infrastructural capital. So we wanted to create a solution that was truly universal. We don't want it to be a machine that you have to install that requires, massive amounts of refrigeration or power generation in order to be able to utilize that machine. Right. We wanted to be respectful of the fact that we have customers in the most advanced warehouses in the world here in the United States, but at the same time, we have okra farmers in Honduras that are applying our product in the middle of the field. We needed to be able to do that. Yeah. So my answer
Aiden,
is...
I got to let you go, in part because I got to go make some guacamole. I'm just kidding. We have another hour of the show, but we have run out of time. Aiden Moat is the CEO of Hazel Technologies, joining us on the phone. Listen, it's National Avocado Day. My avocados are going to last longer. It's a good day, and really good to catch up.
Well, happy Avocado Day, everyone.
Happy Avocado Day, everyone. More ahead.
Okay, ladies and gentlemen, time's up for today. Today was a good day. We closed positions on Japanese yen. So all people who followed for a few weeks us on Japanese yen, well done, because you made a good profit. As always, we donate to charity, so you can find the information to what charity we donate on our website, and on our channel we always promote the charity banner on left side corner of our SG Trader channel. Okay, I hope you like our stream. If you leave a like or subscribe, it will help the channel to grow. Have a great weekend, and I'll speak to you all as always on Monday from 8 o'clock UK time. Have a good weekend. Stay safe. Bye-bye.